Market open, a minute to go until the start of cash equity trading. I'm Francine Lacqua in London with Tom McKenzie.
And here are your top stories. Damage control. President Biden walks back comments calling for Vladimir Putin's removal. Ukraine and Russia are set to resume in-person talks this week. Historic bond rout, a key portion of the Treasury curve inverts for the first time since 2006. The Bank of Japan steps in to cap the rise in yields. Plus, oil retreats as China's COVID resurgence fuels concerns about demand in the world's biggest crude importer. Tesla is said to extend a production shutdown at its Shanghai plant.
Now, Tom, let's also take a look at the futures. It's all going on in the bond market when you look at a lot of insiders or investors saying that they're expecting stocks to take a pause, certainly with the rally. But if you look at futures, so the DAX futures are getting 0.3%, similar gains for the FTSE 100 futures. And again, it's this dichotomy of, okay, if Goldman Sachs, for example, expects 250 basis point hikes at the next two meetings and bonds are falling off a cliff, why is there not a correction in stocks? And that's probably the question underpinning the next couple of trading sessions.
Absolutely, yeah. At what point does that round bond market start to bleed across into the equity markets? So far, certainly in Europe, that isn't happening. We know that US stocks as well are back to their pre-war levels as well. The Spanish IBEX currently opening up 0.4%. The German DAX gaining 0.5% as well. 68 points being added to the German index. France and the CAC 40 is higher as well. Polling, by the way, suggesting that President Macron is in a comfortable lead ahead of the elections in April. And the FTSE 100 gaining a little under 0.2%. We know the Chancellor of the Exchequer is going to be grilled today about his attempts to address the cost of living crisis here in the UK. And of course, that points to inflationary pressures hitting at the corporate level, but at the domestic level in households as well. Let's switch it on and see how things are playing out in terms of the futures stateside and then that yield story, just to build on what Francine was saying. Stateside US futures pointing to losses of 0.4%. The geopolitics, we know that there are going to be talks between the Russians and the Ukrainians. We know that Biden has been walking back his comments that were interpreted by some as being calls for regime change in Russia. Certainly the French and the Brits do not agree with that. The US 10-year currently at 250, a keen line in the sand for these bond markets when it comes to the yields, and just how much further can they go in terms of those yields gradually edging higher. Not gradual though when it comes to the 2-year. You've seen a 11 basis point move for the 2-year just in the trading session today alone. Last week, the biggest jump in yields for the 2-year in about a decade. Brent is currently at 116, down by almost 4%. You've got half of Shanghai in lockdown, the beating financial heart of China. The other half will be locked down in 4 days' time. That is consequential. Bitcoin at 46,000, a little below 47,000, but it has made up for the losses that it had seen over the year. Currently up about 1% or so year to date, and the focus next on the level there at 50,000, currently getting 2%. Francine.
Yeah, Tom, let's also dig deeper into the sectors that are on the move for the moment, and these aren't huge gains. It'd be good to look at the percentage change. I have chemicals on the upside gaining 1% overall. They're the sectors that's actually moving the most. And then I have insurance, media and banks, retail, auto parts, all on the way up. Now, they're getting between 0.6% and 1% on the way down. I only have two sectors, energy down 0.9%. But remember, what we saw last week was a huge swing as we tried to readjust and maybe find a floor for some of the energy prices, given what's going on with Russia. And real estate, the only other sector that's down, but only down some 1.10%. So overall, it does seem like it's a day of of gains. Again, not huge gains, but still these stocks being supported, Tom.
And that reflects across our individual stocks to watch various different sectors here. The banking sector, HSBC, a report by FT that they have softened the language, HSBC, in their reports and their research around what is happening in Ukraine, calling it a conflict, not a war, because of their concerns about their 200 staff there. HSBC not closing their business in Russia despite pressure, unlike the likes of Citigroup, Goldman Sachs and JP Morgan. That's one to watch, currently gaining more than 1%. Telecom Italia just updating on the bids for parts of this business from CVC and KKR. They have a board meeting tomorrow. Argo Block, we pulled this one out. We're having a look at this stock. It is a Bitcoin miner listed in London, Bitcoin mining in Canada largely because of what's happening in the crypto space. Optimism around Bitcoin certainly gaining at 7%, despite the headwinds around central banks removing some of that liquidity and concerns about the scrutiny on this space. Cryptocurrencies around some concern about whether they'll be used to circumvent sanctions. Francine.
Yeah, so one of the things that we're keeping an eye on, of course, a lot of companies saying that they will leave Russia or not. Heineken, Tom, looking at some of the main movers saying they will leave Russia, expecting impairment of about 0.4 billion euros, as Tom was saying. Now let's get over to our Bloomberg MLive managing editor, Mark Cudmore. So, Mark, you have some great charts a lot of the times that go against the grain, which is interesting because a lot of the times you're right. What are you looking at today?
Today, I'm going with the grain, Francine. I am just super excited about what's happening in two-year yields. It's the obvious thing to look at, and even though we've been focused on it for the past 6 months, it is justified getting extra excited again today. What we are seeing in the past month in two-year yields is really unprecedented and quite extraordinary. On the 1st of March, two-year yields intraday traded at 1.26%. Only about an hour ago, they traded at 2.41%. That's 125 basis points range in 1 month. What we've seen in a climb in the past 6 months in yields took us 4 years last time around. And you know what? When it took 4 years last time, even the long build-up, it scared markets in 2018. Equities sold off. It was considered a bit of a panic around then because yields were going too far, too quickly. Well, this has just happened in 6 months. Why are stocks holding up still? It's because this is happening so far, so quickly. It hasn't fed through to the real economy yet. If you took out a loan a couple of months ago, you haven't renewed it yet. You haven't rolled it yet. When you go to roll it, you're suddenly going to be paying a couple hundred basis points more than when you put on these loans. The feed through to the real economy is going to play out over many months. This is going to be a major shock for equity markets, but not necessarily right now, not necessarily right this week. It's U.S. stocks are expensive. They're going to feel the pain of this later on this year, not necessarily rightly immediately.
Mark, thank you so much, as ever, for your wisdom and insight. Bloomberg MLive managing editor Mark Cudmore. Now, President Biden has also tried to clarify his call for Vladimir Putin to be removed from power, saying he was not looking for regime change. It comes as European allies raised concern and critics warned that he was inflaming tensions with Russia further.
We will have a different future, a brighter future, rooted in democracy and principle, hope and light, of decency and dignity, of freedom and possibilities. For God's sake, this man cannot remain in power.
Okay, President Biden there in Warsaw. For more, we are joined by our Washington correspondent, Anne-Marie Hordern, who is on the ground in Poland. Anne-Marie, for many, this was the main takeaway from the speech, whether or not the Biden team wanted it to be. Can you just contextualize it for us and the significance of what some are portraying as a pretty major slip by the president?
Yeah, it was a fiery speech to begin with, where the President of the United States really put all of the blame on this war on President Putin, and it was he went step by step, blow by blow, on what is going on as he was standing in Warsaw, a former Soviet state, on the border with Ukraine. And at the very end, before he thanked everyone for being there and said, "God bless America," he made this remark that many said, is this potentially a change of U.S. policy on regime change? Now, journalists were asking the White House, please, can you clarify this? They said it was not a change of policy. And then we also got that as well from Secretary of State Antony Blinken over the weekend. Take a listen.
As you know, and as you've heard us say repeatedly, we do not have a strategy of regime change in Russia or anywhere else for that matter.
The president himself was asked about this when he was leaving church on Sunday yesterday in Washington, D.C. Did you mean to say that this was regime change? And he said no. But clearly, the president did say what he says. That's what Chancellor Olaf Scholz said. He said this man should not remain in power. But it looks like potentially this was just a personal view. Maybe one official said this was coming from the human perspective after the president just saw a number of Ukrainian refugees. And in that moment, he also called President Putin a butcher. But this does not reflect U.S. policy. But when you wake up this morning and you're talking to officials and looking what President Emmanuel Macron is saying, the UK government is saying, there does seem to be a little bit of concern.
Yeah, certainly the French president definitely taking a swipe at the U.S. president. Anne-Marie, thank you so much. Anne-Marie Horduran there, our Washington correspondent in Warsaw. Now let's get into the key market drivers with our markets editor, Christina Aquino. Christine, there's so much going on, of course, as always, especially on a Monday. So we look at Ukraine for an update there. But this global markets, this global bond rout is, I've never seen anything like it, in modern history. I think Manus was bringing it back to 1984. Is there a floor at some point?
Well, Francine, that is the big question a lot of investors are asking. And at the moment, it really doesn't seem to be. I think what really could bring about that floor is once we start seeing bonds hit that level where there's a better trade-off between holding bonds and accounting for inflation, because at the moment there really isn't. And this is probably why we're seeing this massive repricing in bonds across the globe, really, is because of the fact that, inflation has such a run-up over the past few months, and bondholders really haven't been getting that compensation. And I think until they finally do, we're likely to see this run-up in yields continuing apace.
Well, that takes us, Christine, to the repricing of the Fed hikes. And Goldman Sachs, as Francine was mentioning earlier, pricing in now 250 basis point hikes in the next two meetings. Where are we in our calculation about how hard and how fast the Fed has to go?
Well, Tom, yeah, I think that really is the repricing story has really gathered a lot of steam over the last couple of days. Goldman Sachs, of course, being joined as well by the likes of Citi, also seeing some bumper rate hikes coming over the next few months. In terms of pricing at the moment, we did get that pricing for 200 basis points now by year end for Fed tightening this year. We're looking for pricing for the first 50 basis point rate hike to come in May. We're about 66 basis points away from that. The last time I looked before I headed over here at the desk. And so it really is this story of investors trying to recalibrate and wrap their heads around the potential, not just for more rate hikes from the Fed, but also even bigger rate hikes to come, especially in the next couple of months.
So, Christine, I moderated actually on Friday a panel with John Williams. That's when he said, look, I'm not against the 50 basis points hike. So at the next meeting in May. So is that now priced in? And does it make sense to front load everything? Because we don't know how inflation plays out later on in the year.
Yeah, I think, Francine, markets, that's exactly what they're trying to get towards, is pricing in that first 50 basis point rate hike as soon as May, which is the Fed's next meeting. We certainly heard that being endorsed by a number of Fed officials over the past week, and markets haven't quite gotten on board just yet. They haven't moved very quickly to reflect that in pricing. But I think this week, especially as we're kicking off the week this Monday with a massive bond rout, I think it really is. There's a lot of momentum there. There's a lot of pressure for traders to start thinking about 50 as soon as May.
The outlier being the BOJ, where you're just seeing this head-to-head between the markets and the BOJ, and the market's really challenging the Central Bank of Japan as they step in to try and cap yields at this level. The significance then of that rate differential between the BOJ and the Fed.
Absolutely, Tom. I think, the Bank of Japan, we know, is one of the last stalwarts of a slightly more dovish approach to policy. Even this year, when they were trying to communicate that message that they are getting on board the normalization train, they're still well behind the Fed in this process. But I think, you're absolutely right in pointing out that now the markets has zeroed in on the Bank of Japan as kind of the next battleground, really, for this battle between higher yields and policymakers trying to keep policy still very much accommodative. And I think what's key here is really the pace. The Bank of Japan is really a central bank, has proven time and time again that any sudden violent moves in markets, they're really not big fans of. And that's what we've seen today from their intervention in the bond market.
Okay, Christina Aquino walking us through the central bank action, of course, from our Markets Live team. Coming up, we're going to talk to Peter Oppenheimer, don't miss this one, from Goldman Sachs, about the geopolitical risk, of course, emanating out of Ukraine and the markets, how to position. That is next. This is Bloomberg.
they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Welcome back to the Open, everyone. 14 minutes into the European trading day, and you can see actually a lot of these stocks are holding on to their gains. The DAX getting some 1.2%, European stocks 0.5% higher. All of the movement today is actually on sovereign bonds tumbling, and if you look at U.S. equity futures, they're feeling a little bit more of the pressure. Of course, this is economic risk from inflation and tightening monetary policy, but depending on the asset class, it's reacting very differently.
And as we've been discussing, Ukrainian and Russian negotiating teams are set to resume in-person talks in Turkey this week. This is as President Biden says he is not seeking regime change in Moscow, clarifying a comment he made at the end of a European trip that Vladimir Putin, quote, cannot remain in power. The BBC reports that President Zelensky says Ukraine is prepared to discuss adopting a neutral status as part of a deal. Peter Oppenheimer, Goldman Sachs Chief Global Equity Strategist, joins us now. Peter, of course, we want to get your views on what is happening in terms of the bond markets, the rout there, the yields that we continue to see, the two-year yield up another 12 basis points today. But let's start with the geopolitics as we led in with you there. How are you thinking about what is emanating for Ukraine, how to position around those risks?
Hi, Tom. Well, of course, in terms of the ongoing war, it's a huge humanitarian tragedy, and it does have economic consequences. And I think the market is playing those through. True, equities overall are doing well, and we can discuss the reasons for that. But I think that we're still seeing a move towards value that's not that cyclical, because, of course, as we have this increased focus on a stagflationary environment, investors are trying to avoid things that are very economically sensitive. We're sticking with things where cash flows can still rise in an environment of tougher economic growth, particularly in commodities. And I think that will continue. Some of the fairly defensive areas of the market, things like consumer staples and consumer discretionary, are also, I think, quite vulnerable because of higher input costs and trading down by consumers.
But Peter, when you look at equities, I just don't understand why we're seeing this global equity rebound. And I understand the fact that, you know, some of the growth stocks could outperform, but in general, if it affects bonds, at some point it will have to come and buy equities as well.
Yes, I think that's right, but we need to take into account a few things. First of all, there have been huge positions built up in bonds globally over the last decade or so, as investors have benefited from rates falling to zero, and the tail risk has been mainly deflation, so bonds have been a good place to be. as the shift in the risk moves much more towards inflation, equities, at least relatively speaking, are more attractive. They're a real asset. The dividends will grow over time with inflation, and I think that's one of the factors. Secondly, although overall valuations look quite high, we should bear in mind that many markets are now seeing valuations in equities well below long-run averages, Europe, Asia in particular. And the most egregiously overvalued parts of markets, even in the US, have seen a bear market themselves, particularly in things like unprofitable tech. So the overall valuation of parts of the equity market, I think, look reasonably attractive, and strong private sector balance sheets also give investors some degree of confidence that even in an economic slowdown, profits and dividends won't fall very much.
Peter, just to go back to your point, just going to drill down to this around the positioning in bonds. Where are we? Can we get a sense of the time frame in terms of where we are as investors position out of those sovereign bonds and start to look for what some would argue are safe havens within the equity space? What is the time frame? What are we looking at?
Well, I think given that we've seen such a strong accumulation of fixed income assets among investors over the last more than decade, it will take a long time for people to shift towards perhaps more equities in portfolios. And this is true not just for equity-specific investors, of course, but also for multi-asset investors that have been very happily holding 60-40 type benchmarks, but where that 40% in bonds is now looking rather risky, and therefore they're looking at alternatives, literally uncorrelated alternative assets, but also raising equity weightings. And if we look at the decade or so after the financial crisis, even in the US, the only net buyer cumulatively of equities was the corporate sector itself that was buying back shares. So I think there's still quite a long way to move over time towards higher equity exposures, albeit still with a lower return than we were seeing in the last decade.
Peter, what would it take for you to actually turn negative on equities worldwide?
I think the crucial thing is not so much the moves in interest rates. Of course, we've seen a massive adjustment now in interest rate expectations over just a few months, and we think the terminal rate still needs to be priced higher at 3 to 3.25% in the US. But even at that level, in real terms, this would be a relatively low level of interest rates at the peak of an interest rate cycle. And given that we've got strong private sector balance sheets, I think that protects equities at least to some degree. The biggest risk, I think, is in terms of economic growth. If we were to get a deeper recession, then I think that would be the thing that would push equities down much further, because the kind of estimates that analysts have for profit growth over the course of this year just won't be achieved. And it's really growth in the end that equities are making a claim on, and I think that's the biggest risk.
Peter, thank you so much. Peter Oppenheimer, the Goldman Sachs Chief Global Equity Strategist, stays with us. We'll talk a lot more about China next. Coming up, Chinese stocks and oil slide as the country's virus flare-up worsens. Well, Shanghai is actually putting its 25 million residents into a staggered lockdown. We'll have plenty more on that later in the program. And this is Bloomberg. Join me on Leaders with Lacqua as we explore what drives the most influential people on the planet. Leaders with Lacqua on Bloomberg Television, TV Go, and Bloomberg.com.
cities.
We're in London, in Sydney,
in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
So recap the headlines.
You do not want to miss this story. How are you thinking about those dynamics?
Welcome back to the Open. We are 24 minutes into your European trading day. You're seeing gains of 0.6% on the benchmark stock 600. Nasdaq E-mini futures pointing to losses of around 0.2%. Let's switch focus to what's happening in China and the lockdowns there. Locking down the eastern half of Shanghai, of course, the big financial heart of China. That's a city of 25 million people for 4 days of mass COVID testing. Peter Oppenheimer, Goldman Sachs Chief Global Equity Strategist, is still with us. I'm just looking at the CSI 300 year to date, Peter, down around 16%. There's a view from some that China, Beijing will have to step in with monetary policy support and fiscal support, given all the headwinds that this economy is facing, particularly when you see a city of the size and importance of Shanghai locked down, at least half of it locked down for now. What is your stance on the ability of Chinese authorities to support the economy there, whether or not you want to be hedging to some extent and getting exposure to Chinese equities at this point?
Yeah, Tom, I think the shutdown, as you say, of such a big region is going to have a negative impact. And already, of course, the economy was slowing. The focus on common prosperity and deleveraging the real estate market and many other headwinds were slowing growth. And our forecast is that GDP growth this year is 4.5%. That's well below consensus, and around 5% next year. And this will probably increase the downside risk. That being said, the Chinese policy abilities are somewhat counter-cyclical relative to, for example, what we're seeing in the US, and there is scope for more policy easing, and I think you'll likely see that come through. In terms of the market, of course, it's fallen a very long way. And part of this is the weakness in the economy. Part of it, of course, is the hit that we've seen in technology and long duration stocks, and also a rise in the risk premium that we've seen given the heightened geopolitical tensions. But our strategists in Asia are positive on the Chinese market. They see some really good value there. And I think selectively they're going to be opportunities for investors. But certainly on the growth front, we would still see the prospects being below the current consensus.
Peter, very quickly, in 30 seconds, where precisely do you see value in Europe, given the proximity to Russia and dependence on Russian gas?
Yeah, well, Europe, the growth risks, of course, are all on the downside, but we've been very bullish, in particular on commodity-related equities, not just in Europe, but globally, and resources as well. We see further upside in the underlying commodities, and these areas of the market are still very cheap. That, and also areas of the market that are very heavily sensitive to government expenditure.
Peter, thank you so much. Peter Oppenheimer, there, Goldman Sachs Chief Global Equity Strategist. Coming up, President Biden hails a strengthening NATO. The White House insists President Biden was not calling for regime change. We'll talk about that. This is Bloomberg.
hedge funds seem to come and go. Sometimes they're hot, sometimes they're cold, sometimes they go out of business. You've been in business for almost half a century, and you got 150 billion. What did you do that nobody else has been able to do?
What we were able to do was to be able to structure portfolios in a way that were better in terms of the returns, risks, and correlations of our investors. So to give you that an idea, in other words, you could balance things in a way. I could take different alphas, different bets in different markets, and I could carry that and put that in a fund called Pure Alpha. Then I could take different asset classes and put that in a fund which was called Pure Beta. And then we could engineer it for the customer's risk levels. Do you want it at 12% volatility, 18% vol? And then they would, whatever benchmark they wanted, we could put the alpha on top of. So they could say, I want the S&P 500 plus a 6% vol operating that way. I know it all sounds complicated, but we could design and structure things to their liking that would produce an attractive risk and return that also was not correlated with their other investment.
Really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Welcome back to the Open, everyone. 30 minutes into the European trading day, and here are your top stories. Damage control. President Biden walks back comments calling for Vladimir Putin's removal. Ukraine and Russia are set to resume in-person talks this week. Historic bond rout, while a key portion of the Treasury curve inverts for the first time since 2006. The Bank of Japan steps in to cap the rise in yields. Plus, oil retreats as China's COVID resurgence fuels concerns about demand in the world's biggest crude importer, while Tesla is set to extend a production shutdown at its Shanghai plant. Tom, we're seeing huge moves actually when it comes to bonds. This bond rout continuing, so we look at levels and the inverted yield curve, but actually stocks are pretty much supported.
Yeah, the bleed across to equities is not there. They're supported. Peter Oppenheimer of Goldman Sachs telling us just in the last few minutes, a lot of that is because investors are positioning out of their space within the Treasury market and into equities, and he expects that to continue for some time. You're seeing gains of around 0.7% across the benchmark. DAX is outperforming the rest of the main indexes here in Europe, gaining 1.3%. The FTSE 100 is up 0.4%. On the docket for the UK, you have the Chancellor of the Exchequer speaking later today. He'll be grilled on his attempts to address, or not, some would argue, the cost of living crisis. And then you have the Bank of England Governor speaking tomorrow as well. By the way, when it comes to central banks, there is this pricing now. Goldman Sachs making the call that you're going to get 2 50 basis point hikes at the next 2 meetings from the Fed. So that reposition, that repricing around the central banks continues. Let's move it on, see how things are breaking out across the sectors. There is this optimism, modest optimism at least, and we know that on the geopolitics, President Biden's trying to walk back those comments that some interpreted as regime change calls for Putin. He's walking that back, him and his team, and we know that there are going to be talks between Ukraine and Russia in the few days ahead. In terms of the sectors, the leading chemicals, insurance, and auto parts at the bottom of the list, just one, energy, range-bound. You've seen Brent coming off. Part of that is down to concerns about demand emanating from China, where Shanghai has locked down, or at least the authorities have locked down half of Shanghai, the financial hub, of course, for that country. Francine.
Now, Tom, President Biden has tried to clarify his call for Putin to be removed from power, saying he was not looking for a regime change. It comes as European allies raised concern and critics warned that he was inflaming tensions with Russia further.
We will have a different future, a brighter future, rooted in democracy and principle, hope and light, of decency and dignity, of freedom and possibilities. For God's sake, this man cannot remain in power.
Now, for more, we're joined by our Washington correspondent, Anne-Marie Horder. And Anne-Marie, for many, this was the main takeaway of the speech, and I know you contextualized it for us in saying, look, I don't know. Basically, the main question is, if he was asked this before the speech, would he have said the same thing?
It's a great question. The speech almost felt like he led up to this moment, but this moment was unscripted because blow by blow, he went through the fact that this was all at the hands of President Putin. He drew a ton of parallels between the Soviet Union and the Cold War, the United States, and really the speech was about a path of democracy versus autocracy and everything the United States is doing to try to stop this, the economic sanctions, as well as all the humanitarian aid and the military support they are giving Ukraine. But since the president made that moment, we saw the White House backtrack. Then we heard from Secretary of State Antony Blinken in Israel talking about it. And the president himself yesterday, when asked about it, did you mean regime change? He said no. But it was very clear what the president said, scripted or unscripted. He said this man should not remain in power.
Anne-Marie, when it comes to the positioning and the symbolism of Biden being in a NATO country to deliver this speech and meeting with those refugees, meeting, of course, with policymakers, lawmakers of Poland, what was the takeaway from the Polish authorities and what was the message that Biden was trying to send on NATO?
Well, Eastern European countries are obviously incredibly worried, right? Because they are right on the line when it comes to Russia. And you have Poland, which is bordering Ukraine, and they're very concerned, especially when you see missiles hit just miles away from the Polish border. So the president is meeting with his counterpart, President Duda. He made it clear that he says, and he reiterated this a number of times, that he takes NATO and Article 5 as sacred, a sacred obligation for the United States and other NATO allies. Take a listen.
Don't even think about moving on one single inch of NATO territory. We have sacred obligation. We have a sacred obligation under Article 5 to defend each and every inch of NATO territory with the full force of our collective power. Russia wanted less of a NATO presence on his border, but now he has a stronger presence, a larger presence, with over 100,000 American troops here, along with all the other members of NATO.
So you can hear the president as he said that President Putin better not make 1 inch onto NATO territory. The crowd erupted in applause because this is something on the minds of everyday people here in Poland.
Yeah, absolutely. Thank you, Anne-Marie Hordon, who's been following this, of course, since the president touched down in Europe. Our Washington correspondent in the Polish capital, Warsaw. Okay, China is grappling with a number of COVID outbreaks across the country, the worst since the pandemic began. In an effort to curb the spread in Shanghai, the city of 25 million people is being locked down in 2 phases this week for mass testing of residents. For more, we are joined by Bloomberg's Alan Wan in Shanghai. Alan, what are the latest developments then on the ground? What are you seeing in Shanghai? How does this differ to previous attempts by the Chinese government to get this virus under control?
Well, right now, a lot of manufacturers are starting to announce long production pauses. For example, Tesla, initially it was just going to be 1 day, and now they're extending their production suspension for 4 days. And a lot of financial companies, last week we reported how some financial companies and traders were making contingency plans in case of some lockdowns, supplying air mattresses and instant noodles and whatnot. And now they actually last night, after Sunday night, they actually called in financial workers, come into the office. We'll give you bonuses because we need you to continue to working during this lockdown. And of course, on the ground, you've got the long lines of people trying to get tested. You've got a lot of shortages of food and other essentials right now as well. So that's been a big concern for a lot of people here in Shanghai.
Alan, it is absolutely incredible. I mean, I know you're barred from leaving the house. You know, public transport, car-hailing services are also suspended. Private cars not allowed on the roads. How are people taking it? And again, is this just the first step in this zero COVID policy being relaxed?
Yeah, I mean, I would say people are incredibly frustrated. I mean, you're not going to see protests just because this is China, but you see a lot of, a lot of complaints on Weibo and WeChat and all that. Just because, a few weeks ago we had lockdowns, we had targeted lockdowns, and we thought we were approaching the end of all this, and now it's been ramped up. Now these are strict lockdowns, meaning you can't even go downstairs. You can't even go downstairs to pick your food. You're locked in. So I think a lot of people are really frustrated and angry that we have to do this again. And now for another, up until next Wednesday. I look at Shenzhen. We were mocking Shenzhen because they had a 1 week lockdown. And now you're looking at a week and a half in Shanghai.
All right, Alan, thanks so much. I had understood that then it gets relaxed after this. I'm not sure whether that's the case. Alan Wang there in Shanghai joining us, of course, on this massive testing and lockdown. Now, top U.S. LNG producer Cheniere Energy says lack of investment and lead time for tankers and facilities will start to bite the market in 2023 and then 2024. The U.S. is ramping up shipments of liquefied natural gas to Europe this year as the continent mounts a worldwide hunt for new supplies to phase out its reliance on Russian energy after the invasion of Ukraine. Well, Bloomberg spoke to Cheniere Chief Commercial Officer at the Doha Forum.
23, 24 are going to be a challenging period for the world to navigate because of the lack of investment 3 to 4 years ago. There's no silver bullet for it. A lot of it is construction, and you have to build tanks that are of a certain design and have certain parameters, and concrete just needs a lot of time to set and at this scale. So there are no easy buttons, no easy solutions.
But do you think that the plans that Europe has outlined to dramatically lower its supplies of natural gas, even very quickly, and then kind of wean itself off in the next few years, are those feasible based on the current market as it stands?
This is a long cycle business. We've been very efficient at Cheniere at bringing our facilities online and ramping them up very quickly once we do. But to build a new train, even in a brownfield like many of ours, takes a better part of 3 years. So the decisions that are made today, like our expansion of Corpus Christi with what we call Stage 3, that volume is going to come online in late 25, 26 timeframe, and that is a project that is already underway that we've given limited notice to proceed on.
Has the Biden administration been in touch with Cheniere specifically about increasing the export capacity of the United States?
We've been on the phone with members of the administration, I think, really on these issues of energy security and flexibility since late last year, early this year, and it really rests on what can we do in order to, again, support our customers and support their flexibility.
That was Anatol Fagin, Cheniere Energy Chief Commercial Officer at the Doha Forum. Coming up, the sanctions on Russia continue to flow, but are they being evaded? More on that next. This is Bloomberg.
The first step in building a connectome is to get your hands on some brains and then cut them up. It all sounds very grim, but Harvard turns out to be quite efficient with its brain harvesting. Jeff's lab can do a year's worth of research with a single mouse brain. Small chunks of the brain are fed into the slicer, where a diamond blade carves off a thin sliver of tissue. The tissue floats along some liquid and onto a piece of tape. The brain slices are then put into this very large machine, where they're photographed in the finest of detail. Software helps stitch the pictures back together into a single 3D image, and algorithms are applied to help make sense of what's going on inside of the brain.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
You will put a woman on Mars. You will bring forth global cooling. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
Welcome back to the Open. We are 43 minutes into your European trading day this Monday morning. The Stock 600, the benchmark, up 0.7%. Not concerned about the bond rout that we are seeing. Every single sector here in Europe currently in the green, led by travel and leisure, insurance and chemicals. Now, as the West continues to ramp up sanctions on Russia's elites and companies, tankers carrying Russian oil, chemicals and other products are going dark, increasingly concealing their movements. Some maritime experts warn this could signal attempts to evade the unprecedented sanctions prompted by the invasion of Ukraine.
Now, joining us to discuss the sanction landscape is Elena Rybakova, Deputy Chief Economist at the Institute of International Finance. Elena, thank you, as always, for joining us. If China is supporting Russia, and at the moment it's unclear the extent of that support, how much would Russia's actually impact from the sanctions be diminished?
Well, it could be diminished significantly, but let's not forget, when you have only one buyer of your products, you're not in a good position. So China and India have been buying Russian oil, but that oil is already at a severe discount. So if you look at oils relative to Brent, we have never seen a discount of this size. It's more than 20 or 30% allegedly right now on trading. So yes, China could continue buying Russian oil. It would be the only buyer. Russia would be very uncomfortable still. Also, let's not forget that secondary sanctions could bite, whether it's China or India or any other buyer. If you remember, in case of Iran, eventually they stopped buying Iranian oil.
Alina, what is the damage report so far on the Russian economy?
Well, the damage report so far, we're forecasting minus 15% on growth. This will wipe out about 15 years of Russia's growth. This is the worst crisis we have seen in recent history, recorded with the modern statistics, so since the 90s. We're expecting the worst in the second quarter, but of course, uncertainty is huge. We hear that there are shortages of goods, and we also hear that basically the shipments have stopped. There are cars at the border, so there is no exports or imports to Russia. Also, the containers cannot move because more than 50% is owned by foreign companies, and also nobody would insure. So we're expecting severe shortages in production as well.
Elena, the question that we continue going back to is, what are the sanctions meant to do? So does a crippling of the Russia economy come with a regime change from internally, or is it just something that leaders need to do to wean off oil and gas longer term?
Thank you. These are indeed two issues. One is actually having the energy security, economic security of European Union. And that is an extremely important tectonic shift in thinking there, that they want to pivot from Russia. Another issue is actually making it more difficult for Russia to finance the war. And definitely sanctions are working there.
Okay, and part of the thinking, I mean, at least some, and this has divided the Europeans with the US, is a potential full boycott. We are not in that territory yet of Russian energy. What would that do? How much of a hole would that blow into the Russian economy if we get to that point?
Well, we're most likely, I think, to get to that point. Why? Is because if you remember, one of the most severe sanctions was on central banks. So they lost about 300 billion out of 640 billion of their reserves because of sanctions. But now, fast forward, they're having inflows of foreign exchange, basically positive current account of about 250 billion this year. So they could rebuild this stock of reserves that they lost in just over a year. So therefore, I think it's important that we continue the discussion on oil and gas in terms of the further measures against Russia.
Elena, how will this play out? So first of all, it's impossible to know, of course, how Vladimir Putin reacts. But if the economy is going badly, is there anything that they can do to try and sustain it? Or do they just leave the citizens to fend for themselves?
Well, I think it's most likely, and they've demonstrated that already, they will leave the citizens to fend for themselves. If you look at the post-2014 strategy of Fortress Russia, that meant actually severe cuts in fiscal spending, on social assistance, on education, on healthcare. They actually made an adjustment post-2014 that is akin to the IMF programs. They did it themselves. So that is a clear signaling that the common citizen can be left for themselves. We have other priorities. The share of so-called hidden expenditure, which we do not know what that is in low teens, and that could be also military spending. So they have reprioritized to build buffers. Of course, sanctions on the central bank have sort of undermined that, but also to spend on other things like national security and defense, which are sort of hidden expenditure on the budget.
We've seen some reports of bank runs, limited bank runs in Russia. How confident can the people of Russia be in their banking system at this point?
Well, they lost a lot of their deposits already. I would say that were not limited bank runs. This was severe, extraordinary, one of the most significant bank runs we have seen immediately after the announcement of sanctions. The demand for cash has increased dramatically as commercial banks went into the liquidity deficit vis-a-vis the central bank from a huge surplus. So they had to borrow from the central bank. And also there's physical cash shortage of dollars and euros. What happened is the severe capital controls have stopped that. People cannot withdraw more than $10,000 up until September. It doesn't matter how many accounts you had. It doesn't matter how much you would like to withdraw per day. This is the whole limit up until September, and it's very likely to be extended. So the reason they managed to stabilize the system is capital controls and limits on withdrawals. It can hold that for now, but anybody who has lost their deposits and access to their deposits, I think will think twice before they re-engage with the financial system.
Elena, thank you so much for all of that insight. Elena Rybakova there, Deputy Chief Economist at the Institute for International Finance, joining us this morning. Now let's get straight to the Bloomberg First Word News. Here's Laura Wright. Hi, Laura.
Hi, Francine. Ukrainian and Russian negotiating teams are set to resume in-person talks in Turkey this week. That's as President Biden says he isn't seeking regime change in Moscow, clarifying a comment he made at the end of a European trip that Vladimir Putin, quote, cannot remain in power. The BBC reports that President Zelensky says Ukraine is prepared to discuss adopting a neutral status as part of a peace deal. The second black box from the crashed China Eastern jet has been found after days of searching. The flight data recorder was recovered among more than 33,000 pieces of wreckage. An official says some parts of the device are severely damaged. The mysterious nosedive of the Boeing 737-800 NG jet last Monday killed all 132 people on board. The US says the revival of a nuclear deal with Iran may not be imminent. That's after recent requests from Tehran, including that Washington remove the Islamic Revolutionary Guard Corps from its list of terrorist organizations. The US is reassessing the political costs of reviving the 2015 deal. Talks between key parties in Vienna have dragged on for a year. Now, just minutes before winning the Oscar for Best Actor, Will Smith slapped comedian Chris Rock on live television in an incident that will go down in the 94-year history of the Academy Awards. Rock had joked that Smith's wife, Jada Smith, who has alopecia, should be in the next G.I. Jane movie, a reference to her very short hair. Smith won his Oscar for his portrayal of Richard Williams in King Richard. Coda, a film about a high school student who can hear, struggling to please her deaf family, won Best Picture, the first by a movie primarily released online. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Tom, Francine.
Laura, thanks so much. Laura Wright in London. It is, it's really overshadowing everything. Everything's talking about the slap. We don't know whether then the police will actually investigate. And you have, especially on social media, like hundreds, if not thousands, of the unabridged version or the unedited version, and then also in like slow replay.
Yeah, this is going to be the meme of the century, isn't it? Because they blanked it out in terms of the audio after Will Smith sat down in the US. We got the audio here in the UK, but that slow-mo sat, look, it was a bad joke. I mean, the lady has alopecia. It's a rubbish joke, but does it call for this kind of slapstick action from Will Smith? There you go. The BBC have broken it down into different segments, by the way, if you want to see that hit. But yeah, Chris Rock apparently not pursuing anything legally at this point.
Yeah, I would say never a good look to assault anyone, no matter what the reason. Coming up, Bitcoin has raised its annual losses with signs of further gains to come. We'll analyze the stealth rally next. This is Bloomberg.
Ginkgo Bioworks was founded in 2009 by several big brains from MIT. The founders wanted to develop ways to treat DNA more or less like software code. You find an organism with an interesting property, snip out the DNA behind that property, and then shove the DNA fragment into something else. The big promise behind synthetic biology is that we'll find a new means to harness nature and bend it to our will. We'll be able to manufacture things like chemicals and fuels and even physical objects in ultra-efficient ways.
Biology is ridiculously advanced, and we're just entering the era of being able to program it to do new things, and it's programmable because inside of it is digital code that we can, as humans, read and write.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Welcome back to the Open, everyone. 55 minutes into the European trading day. European stocks supported, and then we have that new headline of markets pricing in 4-quarter point ECB rate hikes within a year.
What a remarkable shift. Just checking on BTPs and German bunds, just very briefly, you're seeing yields higher on German bunds, the 10-year up about 2 basis points, the 2-year up 5 basis points. Those BTPs, Italy, 10-year up 5 basis points. Euro dollar currently a little softer, largely on the back of stronger dollar.
Yeah, it'll be interesting to see whether the ECB tries to walk that down or not. Yeah. Now, moving on to Bitcoin, the cryptocurrency erasing all of its losses for the year over the past 2 weeks. The stealth rally has pushed the crypto past $45,000 and into positive territory for the year. Now, for more, our crypto czar, Joanna Ossinger, joins us from Singapore. So, Joanna, the price is significant.
Hey, Francine, definitely. Bitcoin's been in about a 35,000 to 45,000 range for about 3 months now. It's just been trapped, unable to get out of it, and it's finally broken out higher. So we have something where it's looking pretty decent, and Bitcoin is such a momentum asset that when it starts to trade higher, it often continues. And actually, it's risen enough above its 50-day moving average at this point that Bespoke Investment Group is saying it's at a point where historically it tends to have doubled in the next 6 months, just because you get that momentum going. So it's looking good. And of course, anything can happen with cryptocurrencies, up or down, but the momentum starting is a positive for it.
Okay, the momentum of Bitcoin. Joanna Ossinger, thank you. Currently trading at just under 47,000 a coin. Okay, that is it for the European Market Open Surveillance. Early edition is up next. Your markets in the green here in Europe. Future stateside pointing lower. This is Bloomberg.
On.
They will be putting the issue of Ukrainian statehood in question.
What is happening is a genocide of Ukrainians.
Ukraine will never be a victory for Putin.
Putin must fail.
Turn to Bloomberg for up-to-the-minute reporting from around the world.
1.2 million million people have crossed over from Ukraine into Poland.
The fastest growing refugee crisis since World War II.
The latest target, a children's hospital and maternity ward.
Putin has gone all in.
And analysis of what it all means to you.
The corporate exodus continues.
Continue the pressure on the Kremlin.
We could see an energy blockade. That would have a massive and devastating impact on the German economy.
For every dollar the United States could lose with the sanctions, the European Union stands to lose 10.
The world has a food security problem already, a huge one.
The Russia-Ukraine invasion is going to be worse for global poverty than the pandemic has been.
I think we're in for a long slog.
For continuing coverage from Ukraine and around the world, keep it tuned to Bloomberg Television and Radio.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Europe must end its dependence on Russian fossil fuels.
A lot of the solutions that will be brought to bear for Europe will be done by the large European players.
For God's sake, this man cannot remain in power.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Here's what's coming up on today's program. Not seeking a regime change, Joe Biden tries to backtrack comments calling for the removal of Vladimir Putin. Ukrainian and Russian negotiators are set to resume in-person talks this week. Oil retreats as China's worsening virus resurgence raises concerns about demand in the world's biggest crude importer. Tesla suspends production as its Shanghai plant amid restrictions. Plus, the global bond rout continues. The BOJ steps in to cap the rise in JGBs. The gap between 5- and 30-year yields inverts for the first time since 2006. And that's our biggest story today. So let's quickly check on the markets, because this underpins everything that we've been talking about, and it probably underpins everything that we'll see in the future. The European stock 600 getting some 0.6%. A Bloomberg headline just crossing the terminal a couple of minutes ago saying that markets are now pricing in 4 hikes from the ECB this year, or certainly in the next 12 months. It's not quite this year since we're in March. It'll be interesting to see whether the ECB is okay with that or whether they try to talk it back. The U.S. 2-year yield 2.394, and you can see because of this widening bond rout that's really accelerating, the biggest bond rout in modern history, means that the BOJ had to step in. It depends on whether you trust a lot of the FX traders or the bond traders to call it right, but you can see dollar-yen 123.94, and then we go to Warsaw to our Anne-Marie Hordern, where we talk about crude oil currently at 109.41. Just a reminder, there is OPEC Plus this week. It's virtual. There is a lot of talk also about how we wean our dependence of Russian gas and oil. So this is a picture for the markets. It's really the DAX that's leading the gains. Most sectors are on the move. The upside, the DAX gains some 1.1%. You can see the CAC 40, 0.9% higher. Now, President Biden has tried to clarify his call for Putin to be removed from power, saying he was not looking for a regime change. Now, it comes as European allies raised concern and critics warned he was inflaming tensions with Russia further.
We will have a different future, a brighter future, rooted in democracy and principle, hope and light, of decency and dignity, of freedom and possibilities. For God's sake, this man cannot remain in power.
Now, for more, we're joined by our Washington correspondent, Anne-Marie Hordern. Anne-Marie, I know his team are trying to walk it back, saying it was maybe his personal statement, he was influenced by refugees, but he did call for regime change. Is that not what the U.S. wants?
It isn't isn't what the U.S. wants. And this entire speech was almost building to this moment, which we now know was unscripted. And the president said this man cannot remain in power. The White House immediately responded, saying this was not a change of policy. And then, Francine, over the weekend, we heard from the president's top diplomat, Secretary of State Antony Blinken. Take a listen to what he had to say.
As you've heard us say repeatedly, we do not have a strategy of regime change in Russia or anywhere else for that matter.
And then the president himself, Francine, was asked about this in Washington, D.C. Were you calling for a policy change? Were you calling for regime change in Russia? And he said no. That was his answer. But the issue is he did say this. And that is why you have leaders like Emmanuel Macron and the UK government coming out and potentially saying we should tamper down this rhetoric, because obviously they are trying to de-escalate what is going on in Ukraine.
Yeah, frankly, a lot of people would probably argue the fact that it wasn't helpful. President Biden also spoke from a NATO country, Poland, where you are on the border of this war. So what was his message, Anne-Marie, to NATO?
So his message was very clear off the heels of his meeting as well at the NATO headquarters in Brussels. The president has been wanting to make a very strong plea for NATO unity, and also the United States is sending more troops to the eastern flank of NATO. And this is something of concern of everyday Polish people, because how close they are to the border, obviously the border country of Ukraine, and even a missile hitting miles from that border within Ukraine, there has been concern. But the president made it clear that the United States stands firmly beside Article 5. Take a listen.
Don't even think about moving on one single inch of NATO territory. We have sacred obligation. We have a sacred obligation under Article 5 to defend each and every inch of NATO territory with the full force of our collective power. Russia wanted less of a NATO presence on his border, but now he has a stronger presence, a larger presence, with over 100,000 American troops here, along with all the other members of NATO.
And that larger presence, Francine, I asked as Press Secretary of the Pentagon, John Kirby, at NATO HQ, is this something that we can see in the future? Is this something that may remain a stronger U.S. presence in Europe? And the short answer was maybe.
Great reporting on the ground. Our Anne-Marie Horder there, our Washington correspondent in Warsaw. Now, markets kicking off the week in a risk-off mode. The steepest global bond rout of the modern era is deepening this morning. Treasury sliding. A key portion of the U.S. yield curve has inverted, and the Bank of Japan has even stepped in to cap the rise in yields there. Well, we're joined by Bloomberg's markets editor, Christina Kino, and also joined by Claudia Panseri, head of equity strategies and tactical asset allocation at UBS Global Wealth Management. So thank you both for joining us. Christina, it's not quite risk off, because actually if you look at equities, they're still rising, not a huge amount, but actually there's still this differential in play on how both asset classes are looking at inflation.
Absolutely, Francine. It is quite the puzzle for investors at the moment, because again, we've been used to this environment of, when yields are rising, then you're usually seeing equities selling off as well. But I think there's a bit of a difference now, and that has to do probably with some of the catalysts of this latest move. I think what really is pushing bonds this time around is that, again, realization that the idea of a bumper Federal Reserve rate hike or other rate hikes from other central banks is back on the table. That story kind of took a backseat to the Russia-Ukraine war in earlier this month, but I think that really is becoming more front and center now. Meanwhile, I think equity investors still kind of trying to digest this news, and you know, I think they've kind of gotten used to the idea of faster rate hikes and more rate hikes from central banks already, and so you could argue that maybe a lot of that is already priced in.
Yeah, and Claudia, I guess there's a huge also repricing when it comes to markets expecting the ECB now that, you know, crossed a couple of minutes ago, expecting the ECB to hike 4 times this year. Are they freaked out about central banks front loading because we don't know what inflation looks like further down the line, or is this big move in bonds warranted?
I think a lot is pricing. In US, the 2 years we have seen the move has been impressive over the last few weeks, and a lot is being priced in the Eurozone as well. Probably central bank will start hiking, and then they will try to understand which impact this rising rate will have on the economy, probably before to make a step back. So the market is, I was listening, but I believe the market is also reacting well, because rising rate mean as well a lower risk of stagflation. And stagflation is quite a negative for bonds and equity as well. So the fact that central banks are reacting, that could also continue to support equity going forward if the economy stays strong.
Yeah, I love the chat, Christine, also, and Claudia. I mean, some of it is, oh, these traders, they don't know how to bond what we're looking through. This was not like 1984. Everyone's too young to be able to deal exactly with what we're seeing. What does the inverted yield curve tell you, Christine, about what's coming?
Well, Francine, it really is mixed messaging now. And it's actually a fair statement to say that this really is not your grandfather's bond route, you know. This is really a new territory here. And I think, you know, what we were discussing on the desk actually is not just necessarily that inversion of 530s curve, but also its contrast with the shorter term yield curve, which Jay Powell has drawn a lot of attention to. This is the 3-month, 18-month spread, and that actually is steepening a bit more. And so you have this contrast between a shorter yield curve steepening and the longer yield curve inverting. And, you know, I think where that intersection lies is really to do with how markets are digesting the rate path, you know. And so I think it would be really interesting to see, you know, whether markets kind of get on board with this message from Federal Reserve officials of faster and more front-loaded rate hikes, or will they kind of approach that with a bit more of a measured pace? And also, more importantly, when will they start looking for that first rate cut? At the moment, we're seeing that 2 months or 2 years out into the horizon. It'd be interesting to see if that starts getting earlier and earlier.
Okay, I love that. Christina Aquino with really, you know, not your grandfather's bond route. It will be symbolic in my head also because the bond market was so much smaller at the time. Claudia, give me a sense of what it means for equities. I know you're still constructive on equities, but at some point we'll probably have to see a correction if this stays on. So is it just a problem of time that they need to play catch up when it starts hitting margins?
I think it depends also about the earnings season and what the company may continue to release in the coming month. People are concerned about the fact that you have a rise rate, and so you have multiple contraction, but as long as the earnings will keep going and growth remain positive, I think there is still more support on the equity market. For investor, it's very important to be selective. We have seen dispersion across sector and region. The way we look at this kind of market, we keep our value exposure and our exposure to financial, which usually behave as an edge to rising rate, especially when the economic growth remains strong and especially when the earning side is still positive.
All right, thank you both for joining us. Sorry, Christina Aquino, there, Bloomberg's markets editor, Claudia Panseri from UBS Global Wealth Management stays with us. Coming up, Russia reframes its war priorities later on in the program. We'll also be joined by the war studies expert, Frank Ledviga, who discusses the latest combat dynamics. That's coming up later, and this is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy?
Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
My colleagues and I may well reach the conclusion that we'll need to move more quickly.
Faster is better. An extremely aggressive rate path is appropriate today.
If we think it's appropriate to raise 50 basis points at a meeting or meetings, we will do so.
If it's appropriate to raise interest rates by 50 basis points at a meeting, then I would think that we should do that.
Maybe if 50 helps. I'm open-minded about that.
50 basis point moves would definitely be in the mix.
If we need to do 50, 50 is what we'll do.
I don't think 50 basis points should be off the table.
I have everything on the table right now.
It could be 25, it could be 50, it could be 75, it could be 1.
We've had periods of history where we've had a soft landing, and so it's not unusual that we can achieve that.
The economy is very strong and well positioned to withstand tighter monetary policy.
There you go. U.S. Fed leaders discussing a potential more aggressive policy in the months to come. 50 basis points is on the table in case everybody didn't get the message. Now, we also have some breaking news out of the Bloomberg terminal. Spain planning 16 billion euros in aid through June 30th. This is according to the Prime Minister, Mr. Sanchez. So we'll see exactly where it goes. And of course, the flip side to that, what it means for the deficit. We'll see exactly the fault lines for some of these countries and what it means for, of course, a stability pact and some of maybe the outfalls that we've seen for that. The Spanish 10-year yield, 1.490. Now we're back with Claudia Pinseri, Head of Equity Strategies and Tactical Asset Allocation at UBS Global Wealth Management. Claudia, thank you so much for staying with us. A couple of questions, first of all, on regionally, and you did tell us about some of the sectors that you like the most, but Europe is so close to Russia and has more to lose if there's energy, gas, and oil being cut off. Regionally, what's your favorite region when it comes to equities?
We cut back Eurozone, which was one of the region we like a lot at the beginning of the year, but with the start of the conflict, we moved from most preferred to neutral. I have to say that this time around, we have been more focused on sector rather than region. The different way we look at the market is where we could take profit from higher energy price and from higher interest rate. So the best way is really to go through the sector and go through the stocks, the different styles. So I was mentioning value, financial, but also we have a big exposure to energy stocks to take profit from the high energy prices.
So you prefer commodities, you prefer value sectors. What needs to happen for you to go cold on some of these sectors?
I think for the time being, we are very comfortable because we still expect the rate to move higher, but we also expect the economy to remain strong. So we are comfortable with this exposure to value overall and preference of value versus growth. I think what will make us changes will be a different view or different environment about economic growth and earnings. If the tightening financial condition plus the rise in commodity price will put the earnings growth, economic growth under pressure, we'll probably switch out of value, but this is not our central scenario for now.
When you look at food, national defense, and climate, Claudia, what's your overall take on these sectors that are specifically affected with the war in Ukraine?
Yeah, so this is the reason why we have this exposure to energy in particular, because we are concerned about the rise in commodity price and supply chain disruption on some other sector. We tend to remain very concerned, very focused on this energy and commodities overall. We are negative, for instance, at the global level on sector which are negatively impacted by rise in rates, such as real estate and consumer staples.
All right, Claudia, as always, thank you so much for your time. Claudia Panseri, their head of equity strategies and tactical asset allocation at UBS Global Wealth Management. Now let's get straight to the Bloomberg First Word News. Here's Leanne Garrett. Hi, Leanne.
Hi, Francine. The second black box from the crashed China Eastern jet has been found after days of searching. The flight data recorder was recovered among more than 33,000 pieces of wreckage. An official says some parts of the device are severely damaged. The mysterious nosedive of the Boeing 737-800 NG jet last Monday killed all 132 people on board. Now, just minutes before winning the Oscars for Best Actor, Will Smith slapped comedian Chris Rock live on television in an incident that will go down in the 94-year history of the Academy Awards. Rock had joked that Smith's wife, Jada Pinkett Smith, who has alopecia, should be in the next G.I. Jane movie, a reference to her very short hair. Smith won his Oscar for his portrayal of Richard Williams in King Richard. Coda, a film about a high school student who can hear, struggling to please her deaf parents, won Best Picture, the first by a movie primarily released online. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, coming up, Chinese stocks and oil slide as the country's virus flare-up worsens. Shanghai is putting its 25 million residents into a staggered lockdown. We have plenty more on that next. This is Bloomberg.
Accelerating into a digitized and decentralized future.
That is why Bitcoin is here. The cryptocurrency market has roughly a $3 trillion market cap. That's a huge milestone.
This is the largest, fastest wealth creation event in the history of the world. And financial institutions have only now just figured this out.
It is a power to the people kind of technology.
However, we are still tied to the centralized banking system in a way that is unnecessary.
The crypto sector today is largely unregulated.
This is a little bit like the American Wild West.
Essentially what DeFi is, it's like a big casino.
That's scary to the JP Morgans because they're seeing all this growth and they're left out.
You all can do whatever you want and I don't care.
We're seeing a revolution unfold right now. These are historic times.
Buckle your seatbelt. This is where the ride gets really interesting.
You will put a woman on Mars. You will be the first chief crypto officer, because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, China is grappling with a number of COVID outbreaks across this country, the worst since the pandemic began. In an effort to curb the spread in Shanghai, the city of 25 million people is being locked down in 2 phases this week for mass testing of residents. Well, for more, we're now joined by Bloomberg's Alan Wang, who's in Shanghai. Alan, so what exactly are the latest developments on the ground? You can't leave the house, you can't drive.
Well, that's right. Well, for me, I'm in Puxi, and it's not going to affect me until Wednesday, when basically I won't even be able to leave my apartment. But right now in Pudong, since this morning, people can't leave their apartments. There's no subway or bus service, and a lot of companies have had to suspend production, including Tesla, has had to start to suspend its production for the next 4 days. And financial companies are calling it, last night actually, when the announcement was first made, a lot of financial firms told the traders, come on in right now, because otherwise you're not going to be able to get in. And all these contingency plans are being executed right now.
So, Alan, what are the economic and business impacts from the lockdown? I know people can't protest, but are people just fed up?
Well, yes. I mean, well, 2 parts. First is economic impact. Right now, NatWest just came out with a forecast saying that they expect a 0.4 percentage point cut in growth in the first and second quarters due to the lockdown. And it's already, the government announced a very ambitious growth target for this year early this month, and it's becoming even harder now that we have this lockdown, which is going to dampen, of course, consumption as well as restrict travel. And on the second part of the question, in terms of frustration, yes, there's immense frustration. I've been getting videos from folks, showing people getting into fistfights inside supermarkets. Wow. There've been a lot of complaints, of course, on WeChat and Weibo. Yeah. And all because,
Alan, very quickly, what happens next? So can China actually stick to their zero COVID policy?
Well, they're trying really hard. And the thing is that they are showing some signs of flexibility. Just yesterday, the neighborhood committee where I live, they came upstairs and gave me a rapid antigen test. Instead of having to wait online for hours, they're allowing us to self-diagnose using these rapid tests. So there's some flexibility, but by and large, I think that the government is going to stick to its zero strategy. But what happens if cases continue to spike up like they are doing right now? Is Shanghai going to build makeshift hospitals like we've seen in Jilin province and Qingdao?
Alan, thanks so much. Bloomberg's Alan Wang in Shanghai joining us. Coming up, Will Smith slaps Chris Rock after making a joke about his wife at the Oscars. We'll have plenty more on that next.
city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Not seeking a regime change while Joe Biden tries to backtrack comments calling for the removal of Vladimir Putin. Ukrainian and Russian negotiators are set to resume in-person talks this week. Oil retreats as China's worsening virus resurgence raises concerns about demand in the world's biggest crude importer, while Tesla suspends production at its Shanghai plant amid restrictions. Plus, the global bond rout continues. The BOJ steps in to cap the rise in JGBs. The gap between 5- and 30-year yields inverts for the first time since 2006. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, in the last couple of minutes, we also had that headline crossing the Bloomberg terminal. The UK government is investigating cutting contracts with Russia suppliers. Now, what we understand is that the guidance issued to the public sector recommends that public bodies, including government departments and hospital, immediately seek to identify any contracts with Russian or Belarusian companies, and if possible, to switch suppliers with minimal disruption. So we'll see exactly where that ends up, but how many of these contracts are still in place. The other thing we need to watch out for is, of course, the huge risk-off move that we're seeing in bonds, but not so in market or in stocks. Now, this is extremely significant because if you look at the bonds route, the biggest in modern era, it's really flashing some growth signals, and stocks are pretty much mixed. So the U.S. two-year yield, 2.3825, that prompted also Mr. Kuroda of the Bank of Japan to intervene. So you can see dollar-yen at 124.04, and then crude oil, we always look at crude oil, a major part of the inflationary pressures, 109.39. Now, President Biden has tried to clarify his call for Putin to be removed from power, saying he wasn't looking for regime change. Now, it comes as European allies raised concerns and critics warned he was inflaming tensions with Russia further.
We will have a different future, a brighter future, rooted in democracy and principle, hope and light, of decency and dignity, of freedom and possibilities. For God's sake, this man cannot remain in power.
Well, we're now joined by Wolfgang Munschau, Director of Eurointelligence. Wolfgang, I don't know what you find more shocking, the fact that actually he said that, possibly inflaming tensions, or whether he said it and said, oh, but that's not what I meant.
Yeah, I think that's a good question. I think the shocking thing is that he said it in the first place. He had to retract it. It's already caused damage, and it's in politics. Obviously, you can say, I'm sorry, I didn't mean this. But what you do is you reveal what your policy is, or at least what you're discussing. And what you do is you give Putin the ability to say, well, that's what they want to do anyway. They revealed their preferences, and I now have I now can see I can even construe this as a, if I wanted to, as a declaration of war, or I have the right to hit at Western targets. Very dangerous. Already led to a change in policy in the West over the weekend. This is very visible in Berlin and Paris.
So it's harder to de-escalate from here?
Well, I think what the Europeans are doing now is that they are cutting off from the American strategy and are now doing their own thing. You saw the initiative by Macron over the weekend to seek direct talks with Putin over a ceasefire. The Germans, quite interestingly, have essentially stopped the arms deliveries to Ukraine. Scholz is very adamant that he doesn't want to accelerate it. No. Behind the background, I understand he is slowing things down because he's now seeking direct contacts with Putin.
So does that mean that he seeks a way out of this? Again, and will it be, we heard from President Zelensky of Ukraine, they're okay with neutrality, but won't concede even an inch of their territory. Is this something that Putin will accept?
That's very difficult to say, and I think at the moment it looks like Putin is the obstacle to any deals. What I do, however, believe is that the Europeans, the Germans and the French would be willing to pay a higher price in terms of Ukrainian sovereignty than the Americans are. They might just say peace. I wouldn't go quite so far to say it's peace at any cost, but they would probably say, they would probably weigh and put pressure on Ukraine to accept a peace deal, because they realize that if the Americans go, I was reminded of 1981 when Ronald Reagan talked about a limited nuclear war in Europe. Yeah. And this is still sort of, Europeans still have that fear that the Americans are playing their own game, they're raising the risk and may have a higher risk readiness than we do.
Wolfgang, are sanctions working? And actually, to me, it's unclear what sanctions are meant to do. They give a message of that this is a red line, we will attack and sink your economy. But does it make Putin back down?
No, we didn't think this through. The sanctions, we should not have started with the central bank sanctions. That is the last thing we should have done, and maybe in the final thing, we should have started with oil sanctions. But we can't do this, so we chose sanctions that were easiest for us rather than trying to understand or trying to define what purpose they have. Now, Putin can finance his war with rubles. He doesn't need to import. He doesn't need to import goods, at least not immediately. Yeah. But if we wanted to stop him over, say, a period of 6 months to 1 year, yes, the oil and gas sanctions would have a massive impact because they would deprive him of the oil revenues. Now, that would have been the first thing we should have done. Now, Nord Stream 2 is cheap. It's good. I've been asking for this for a long time, but it's no oil flows through it. It doesn't. Yeah. It has no operational significance.
But so the sanctions put in place, what was the thinking behind them? That it puts internal pressures? We know that people can't actually go to the streets and go against Putin. There's almost no opposition. So, how are we expecting something to happen in Russia?
I think it's muddled thinking. The sanctions, we think that sanctions work against, a country like Iran, the same they work for a country like Russia. But Russia is infinitely bigger. Russia is sitting on oil and gas and precious metals, whose prices have actually increased since the outbreak of the war, and Russia has found ways to circumvent the sanctions. It's not only that they're getting money from us, 700 million euros a day for their oil and gas sales, but they also found systems through correspondence banks in China. The complex nodes of the global financial system make it possible to hide transactions. Yeah. And I know Bloomberg, you reported this morning about the oil tankers, the Russian oil tankers, and all that
have gone
stuff
dark, basically.
Absolutely, and this is all happening.
Yeah, and I was speaking to an expert in this saying, we'd seen that with Iran at the time as well. What do we end up with? So it also seems like the world is divided. India has not really come up, saying they, don't support what Russia has done. We have the same with China and other parts of the world. Are we going to see a split world?
We're going to see very much a split world, and I would actually expect we might even see a split transatlantic alliance, partly also because of Biden's comments. I believe the Germans will not go back on their oil embargo refusal. They have now got a plan to do this over 3 years. I don't actually believe it. I think it will take them longer, but at least that's the plan. They might get out of oil a little earlier than that, coal as well. There's going to be split, and Putin's, a lot of his messaging is not addressed to us. It's addressed to the BRICS, like Brazil, China, India, South Africa, and it seems to be working for him. So.
Very quickly, are you expecting some kind of default in Russia to turn ugly, to spill over?
You mean a financial default?
Financial default.
No, I don't expect him to do that. I think he will honor his contracts. He will also honor. I also think the ruble payment thing will blow over. That's not my fear. I think he will. That's a smart thing from him not to default. That would be a huge mistake if he did that.
All right, Wolfgang, thank you so much. Wolfgang Munchau there, Director of Euro Intelligence, joining us with the very latest, of course, on Ukraine and Russia. Now let's get to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. A consortium led by Australia's Macquarie has agreed to buy a 60% stake in National Grid's gas unit. The deal values the UK transmission business at more than $12.5 billion. National Grid announced plans to sell the gas division last year as it transitions to a low-carbon future. It includes a 7,000-kilometre pipeline network. Now, the FT is reporting that HSBC has been editing research reports to remove any reference to the war in Ukraine. According to the paper, HSBC committees have softened language in multiple reports, including changing the word war to conflict. This is as the lender resists pressure to join peers in closing its business in Russia. An HSBC spokesman declined to comment. And that's your Bloomberg Business Flash. Francine.
Thanks so much, Leanne. Now, we're just getting some breaking news out of the UK. The UK 10-year bond yield rising to 1.75%. That's the highest in 2016. Of course, this will add more pressure on the Bank of England, the first one to accelerate its rate hike because of inflation. It will put even more pressure on the BOE to continue on that path. Now, coming up, Russia says it's reframing its war priorities. We'll be joined by war studies expert Frank Ledviga to discuss the latest combat dynamics. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
You will shed light on dark matter. You will make aging optional. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Russia says it's reframing its war goals in Ukraine after failing to take over the capital of Kyiv and knock out the government. According to the head of Ukraine military intelligence, Russia now wants to split up Ukraine and carve out a separate Moscow-controlled region. Well, we're joined by Frank Ledviga, a senior fellow at the University of Portsmouth. Now, Frank is a former military officer who served in the Balkans, Iraq, and Afghanistan. He's the author of Losing Small Wars and Investment in Blood. Frank, thank you so much for joining us. What, if anything, at this point will make Vladimir Putin back down?
Well, at the moment, the Russians have reached what's called their culminating point, which means they can't really go any further. And despite lots of reporting, I've heard those reports that the Russians have millions or hundreds of thousands of reserves. They haven't. That's not true. They're not ready. So they've gone as far as they can go for now. And I'm talking now for the foreseeable future. So we're at a point of stalemate. The Ukrainians have won this phase to the extent that they prevented the Russians from achieving any of their major objectives. So what could make Putin back down is your question. Yeah.
Yeah, I mean, I understand this is an advancement of troops on the ground, but if the shelling continues with the force that we've had it so far, they could reduce a large part of Ukraine to rebels like they did in Aleppo, Syria.
Well, that's right, and I think that's what they're going to do, although they'll probably reframe their campaign and focus it on one or two areas, down in the Donbass and probably in Kiev as well, I think, to fix the bulk of Ukraine's forces in both those areas. But there are weapons that the West hasn't used yet, and I'm not talking about the big ones. I mean, we hear very little, for example, about the cyber campaign, which I'm certain is furiously raging now, and there's plenty in the West's arsenal there, which certainly would act as a deterrent to Putin were they to deploy it or even threaten to deploy it.
So, Frank, what happens next? What will make Vladimir Putin back down? He's rearranged, or he's expected to rearrange the war. How many troops will he need on the ground if he does win those parts to then secure them?
Well, what he's going to do now is he's going to reframe the campaign on the ground. It's likely that certain areas there'll be withdrawals. The Ukrainians are already gaining ground, although particularly in that northeastern area around Sumy. So they're pushing back. Fairly small gains at the moment, but significant. And the Russians are going to have to dig in there. And paradoxically now, the Russians are going to have to go on the defensive in those areas so that they can focus back on the Donbass area and, of course, the key central gravity Kiev. Kiev will not be taken now, but I suspect it will be shelled. As I say, we've not seen the West deploy or Ukraine deploy cyber yet, or space.
Frank, I guess I don't know how difficult it is to verify how many Russian forces have lost their lives and how difficult that is for Vladimir Putin to justify back home, where there's a big campaign of disinformation and where very few people understand what's going on.
Well, that's right. I mean, I would suspect that Allied estimates or Western estimates of between, probably now we're looking at about 9,000 to 15,000 dead are about right. However, it must be said, and I know it's cruel to say it, most of those losses from the intelligence we've seen, credible intelligence we've seen so far, are from the Russian periphery. They're not striking at the heart of Russia yet. Many of them are from the peripheral and poorer republics. And from Putin's perspective, those are expendable.
All right, Frank, thank you so much. I mean, horrific to think like that, but very, interesting insight that you have. Frank Ludwig there, a senior fellow of the University of Portsmouth, joining us, of course, on some of the war efforts by the Russian side. Now, global bond markets are seeing their steepest sell-off of the modern era, Treasury sliding, the gap between 5- and 30-year yields inverted for the first time since 2006. Meanwhile, Bitcoin has erased all of its losses for this year over the past 2 weeks. The stealth rally pushed the crypto above $45,000. So for more on all of this, Bloomberg's cross-asset markets reporter and crypto czar, Joanna Ossinger, joins us from Singapore. Joanna, good morning, good afternoon for you. Talk us through some of the day's most significant news in the bond market and the read across, of course, to Bitcoin.
Yeah, so Francine, it just looks like this bond rout shows no signs of stopping. The momentum is really all in one direction amid expectations the Fed is going to lead that wave of central bank tightening with the Russia war in Ukraine, just adding to inflation woes, right? So you have Australian 3-year yields reaching the highest since 2014. You have South Korean 10-year yields above 3% for the first time since 2014. So it's really a global story at this point. And of course, you even have things like the 3-year U.S. yields are extending gains versus their Chinese counterparts counterparts after climbing above them last week for the first time since 2009. So there are just a ton of things, including the curve inversions. You mentioned that the 5-year, 30-year has inverted first time since 2006. So we're really seeing all these indicators about worries in the market, possible indicators of recession, things like that. The Bank of Japan even stepped into the market to cap yields after the 10-year went to 0.25%. And of course, the yen is now near 125. So it's the lowest since August 2015. And then you have Bitcoin, as you say, which is looking actually like it's gaining momentum. So it's kind of a bright spot if you look at an asset where it's finally broken above 45,000 and is getting higher.
I was going to ask you, Joanna, about Bitcoin and the significance of today's price action.
Yeah, so actually this is pretty interesting that it's just been stuck in that range of 35 to 45,000 for several months now. It finally has broken higher. Bitcoin is such a momentum asset. When you start to have something like that where it breaks really above, say, its 50-day moving average, it can augur really big gains in the future. In fact, Bespoke did a study saying that after it's this much above its 50 DMA, it is often doubled within 6 months. So watch this space on Bitcoin, and we'll see if the momentum can carry it this time.
Joanna, thanks so much. Joanna Ossinger there, a Bloomberg cross-asset reporter and crypto czar in Singapore. Now, it was a big night at the Oscars, and Apple TV's Coda won Best Picture in the first win for a streaming service. But the moment that may define this year's show was an unscripted moment when actor Will Smith smacked Chris Rock just minutes before Smith won Best Actor. Well, Bloomberg's Sarah Rappaport has the very latest. Sarah, it's a pretty shocking. I mean, everyone is talking about this. Yeah. And if you look at the replay slow motion, it was definitely a big slap. What are people saying about it?
Well, the producers wanted this to be a must-see Oscars, right? Ratings hit a record low last year. People sure are talking about it now. I guess not in the way they wanted to. The Academy Awards actually had to make a statement saying they do not condone violence of any form. And Will Smith actually apologized as well, not to Chris Rock, but to the Academy and to his fellow nominees. He played Richard Williams, the dad of Serena and Venus, and he said that Richard Williams was a fierce defender of his family, and Will Smith was saying that he was also acting as a defender of his wife when he made those comments.
And we understand the police is not investigating this.
The LAPD at this point is not looking into it, no, and Chris Rock has declined to press charges, correct?
I mean, it's amazing. Social media is on fire because of this.
Yeah, I thought I was going to be able to talk about streamers, but everyone's talking about Will Smith and the slap heard around the world instead.
Sarah, thank you so much. Bloomberg's Sarah Rappaport there, joining us on the very latest on Will Smith. Coming up, we'll have the implications of Biden's comments on Europe's dependence on Russia energy. That's coming up next, and this is Bloomberg.
If you do any kind of business in this country, there's a pretty good chance that you're going to see that business registered in Delaware. Why? Because that's where you do it. And our point was Wyoming can be that venue for blockchain enterprise, for crypto.
It's not the Wyoming way to sit around and wait for change. We want that independence, we want that freedom, we want that individuality. And that's a common theme that brings together bipartisan support for this in Wyoming.
We want to make sure that people understand, especially in Wyoming, but as the United States as a whole, this trend is coming. It's not going to stop. This is more of a small town that's growing into what I would call the cryptocurrency version of Silicon Valley.
It's the philosophy of that rugged individualism, the independence, and the ability to really get things done for yourself and control your own destiny. You get that from a blockchain, and you don't get that without it.
Isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Welcome back to Bloomberg Surveillance, early edition of Francine Lacqua here in London. Now, we're just getting some pretty big moves when it comes to dollar-yen, rising to 124.53. Now, we did see it briefly touching, I think, 125, if I'm not mistaken. Or certainly that's the level that we're watching out for, currently at 124.77. There are interesting pieces also from Bloomberg Intelligence or Bloomberg Economics saying that the Bank of Japan's intervention to keep rising bond yields in check came later than some in the market had expected. So basically, the central bank waited until the last possible minute to pull the trigger. It's really the timing of the intervention and not the move itself that is significant, according to Bloomberg Economics. Now, President Biden has tried to clarify his call for Putin to be removed from power, saying he was not looking for regime change. It comes as European allies raised concerns and critics warned he was inflaming tensions with Russia further.
We will have a different future, a brighter future, rooted in democracy and principle, hope and light, of decency and dignity, of freedom and possibilities. For God's sake, this man cannot remain in power.
Now, for more, we're joined by our Washington correspondent, Anne-Marie Hordern, who's in Warsaw, Poland. Anne-Marie, for many, this was the main takeaway of the speech. We just spoke to also Wolfgang Munchau, who says this could be a breaking point where we see actually the way that the U.S. is handling Russia will be different to what the EU will do.
Yeah, and we've already seen comments really trying to temper what the President of the United States said from Olaf Scholz, who said that is not what the NATO allies are intending. Also from Emmanuel Macron, who says words are important, and right now we should be trying to de-escalate the situation. Francine, I got to tell you, over the weekend, the White House has been working overtime to try to soften that comment from the president. Take a listen to what Secretary of State Antony Blinken had to say.
As you know, and as you've heard us say repeatedly, we do not have a strategy of regime change in Russia or anywhere else for that matter.
So the White House is trying to make it clear, Francine, there's no U.S. policy or strategy for regime change in Russia. But at the fiery end of that speech that lasted about 26 minutes long right here in Warsaw, in the capital of Poland, the president did say this man should not remain in power.
Yeah, the problem is that once you say it, even if it's not the actual policy, people think that it could be. And energy, definitely in focus. What do we know on this front?
So energy has been a really big focus of this trip because it is the one part of the Russian economy that's been pretty much unscathed because Europe is so reliant on natural gas and oil from Russia. And what we saw from Brussels with Ursula von der Leyen, the president, talking about a task force to try to bring more LNG in, the president mentioned energy in this speech. Take a listen.
Europe must end its dependence on Russian fossil fuels, and we, the United States, will help.
Well, that was Anne-Marie Hordern, our Washington correspondent in Warsaw. So we'll have plenty more, of course, on this throughout the day. Bloomberg Surveillance Early Edition continues in the next hour with Matt Miller, Kaylee Lyons in New York, Anna Edwards here in London. We'll look at the foreign exchange markets reacting with this global bond rout. This is Bloomberg.
Formula One cars and your local supermarket have in common? Well, strange as it sounds, they might both be using the same technology. A lot of innovation has trickled down from the world of high-tech engines, and it hasn't just found a new life in road cars. F1 cars have long been thought of as the peak of cool, and technology in them is also helping to cool down our produce aisles. Engineers from Williams are using their knowledge from 9 Constructors' Championships, working with company Aerofoil to help reduce the energy consumption of supermarkets. The device they're building is based on the design of an F1 car's rear wing. It attaches to fridges to keep more cool air in the unit. They estimate it can reduce supermarket energy consumption by 25%. One innovation from F1 is also helping hybrids reduce their carbon footprint. That's KERS, or the Kinetic Energy Recovery System. In common parlance, it's known as regenerative braking and works by storing energy of the car decelerating in a battery for later use. If that's not enough, F1 is now looking at TERS, or a thermal energy recovery system, looking to harness the heat produced from braking and the engine exhaust. That could allow cars to generate the same power using 30% less fuel. So while F1 may have a reputation as a gas guzzler, some of its innovations in the name of speed are helping in the everyday fight against climate change.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
The inflationary pressures are likely to last for an extended period.
You look across asset classes, there's very little basically priced in for a change in the inflation regime.
There are no alternatives to equities in some ways because the bonds look toxic, and with the inflation, cash looks toxic.
We're going to be looking at a growth shock and further down the line. I think that's what the yield curve is telling you right now.
This is Bloomberg Surveillance, early edition with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Monday, March 28th. Our top stories today. The biggest global bond rout of the modern era gets even worse. Treasuries are sliding, a key portion of the U.S. curve inverted, and the Bank of Japan steps in twice to cap the rising yields. President Biden is trying to clarify his comment that Vladimir Putin should be removed from office. He says he was not calling for regime change. And the city of Shanghai will be locked down in 2 phases to conduct a mass testing blitz for the coronavirus. The Tesla factory in the city will be shut down for 4 days. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines over in New York. And Kaylee, a real divergence across the Atlantic in terms of risk appetite today.
Yeah, absolutely. And the risk appetite definitely wasn't really present in Asia. Equities were down, broadly speaking. The MSCI Asia Pacific Index falling by about 0.5%. China, an underperformer within that, is Shanghai. At least part of the city is in lockdown to curb the spread of COVID-19 there. But really, the story was not in equities. It is instead in other asset classes like the bond market, where you see the continued selling pressure in global bonds. That was evident in Australia, where the 2-year yield rose 21.5 basis points at 1.795. That is the highest for that yield going back to February of 2019. And then in Japan, the 10-year JGB yield is north of 25 basis points, 0.251%. That is above the top end of the BOJ's range, even in the face of the BOJ announcing overnight 2 unlimited bond buying purchases in the same day. Really an unprecedented move to rein in what we're seeing in the bond market. And it really underscores the easy policy consistently from the BOJ, while you're seeing other central banks turning quite hawkish. So really speaks to a monetary policy divergence, and that is leading to continued weakness in the Japanese yen. North of 124, actually got a taste of 125 to the dollar, the weakest level for the yen going back to August of 2015, Matt.
All right, definitely something that we're watching closely. S&P futures right now, very little changed. And Anna, you know, traders tend to sit on their hands a little bit when Will Smith slaps Chris Rock. I mean, we can't talk about anything else. Nothing else seems interesting until I see this. 10-year yields at 250, almost as unbelievable as the Oscars. Coming up about 3 basis points right now. We're already at the 2.5% that a lot of people had been calling for year end, and we're not even quite to the end of the first quarter yet. NYMEX crude down almost 4%, still around 110 a barrel. And look at Bitcoin, $47,057. It just continues this slow and steady rise over the past few weeks, now erasing all of 2022's losses. So even with the Oscars, there's still a lot going on in markets today. Even with futures unchanged, there's still a lot going on in markets today.
Yeah. Absolutely, there certainly is here on European stocks, but on that Will Smith story, I mean, one of the best read stories across the Bloomberg terminal. So in the Bloomberg universe, clearly many people care about that one. This is the picture for European stocks, and this is the divergence I was talking about there, Matt. You referenced being pretty flat to negative on US futures. That's been the story through much of the European early session. But European stocks moving to the upside. So a bit of divergence there, despite concerns around China and Omicron, despite the war, of course, taking place not all that far. In fact, just to the eastern side of this map, in fact. Let me show you what is lifting markets. Autos and auto parts doing pretty well today. Also the banking sector up by 1.6%. That rising yield environment certainly could do well for some in the banking space. The Brent crude price down by 3.3%. So is it concern around China that is taking the edge off what we're seeing in oil markets? We look ahead to an OPEC meeting later on this week. I put in the UK 10-year yield here as well, just to underline the point that this is a global story, of course, the rising yield environment. Yes, the Treasury curve is a real focus for us at the moment, but we are seeing this global push higher, certainly in developed markets, this push higher in those yields. Although the UK story is really interesting because just recently markets have started to price in over a two-year horizon around 25 basis points of cuts in interest rates. A real concern that inflation goes so far it starts to dent demand, and that's what markets are now starting to focus on. I put in Impost. This is a Polish business, and given Poland so much in our thinking at this point, given recent news flow, a Polish company. It does delivery lockers for online shopping. There's a lot of M&A interest in this particular business right now. Perhaps buyout firms might be interested in it, and the stock is up by more than 30%. Let's show you some Russian assets as well, because these are really front and center for many global investors right now, and the ongoing interest in what is going on and how can we have, or how close to normal are we in terms of trading in Russian stocks? Well, not all that normal right now, because yes, we do have more assets trading, more stocks trading on the Russian exchange today, but we still have a lot of signs of how things are not normal. We have limited trading hours. We see foreign investors unable to sell, and we see no short selling allowed over in Russia. In terms of the ruble, President Putin, of course, wants ruble to be used to pay for gas, to pay for Russian exports, and he says that we're going to get more detail on that by the end of this month. We put in the Russian 10-year yield as well here. Kaylee.
All right, so clearly already a lot to pay attention to on this Monday, and there is a lot more ahead this week. The U.S. budget proposal will be released later on today. Then tomorrow we'll get the latest U.S. consumer confidence figures. OPEC Plus will meet on Thursday. On Friday, it is Jobs Day here in the U.S., and also on Friday, EU and Chinese leaders will be hosting a virtual summit where Russia's invasion of Ukraine is expected to dominate the agenda, Matt.
All right, of course, again. Inflation concerns also dominating the agenda, and they continue to pummel the bond market, prompting more buying from the Bank of Japan, as you showed us earlier, and an inversion of a key part of the U.S. yield curve. 2022 losses now exceeded the full-year record, as we've been talking about. We're joined by Bloomberg's markets editor, Christine Aquino. So it's been a bad quarter for bonds, Christine.
Yeah, Matt, you could say that. No, it's really quite a historic sell-off here that we've seen. I mean, we were just talking last week about the global drawdown in bonds across the globe. This is sovereign and corporate bonds as well, and we saw that reach $2.6 trillion from the peak to trough decline. And that's really something. That's nothing that we've ever seen before, that's surpassing even what we saw in the global financial crisis. And the bad news for bond bulls out there is that it doesn't doesn't look like it's going to be over just yet, because I think, there's still room to reprice really the thinking around the Federal Reserve path. We've seen a number of officials really hammering on that point of 50 basis point rate hikes coming, and we haven't even seen that being fully priced in for May. That might be the next battleground here, Matt.
Christine, good morning. So we see a further inversion of another curve in the United States. So that continues to focus us on the bond market story, as you rightly say. What do we learn from what the BOJ is doing? Is this all around the pace of the move? Central banks just, yes, they want tighter conditions in some parts of the world, but they don't want things to move quite so quickly. What's the lasting impact? We're down 2% on the yen versus the US dollar right now.
Absolutely, Anna. I think it's really significant the way that the Bank of Japan is reacting here. They have traditionally been a very measured sort of central bank. They really hate when things are moving very, very fast, and that's something that they have acted against in the past. And I think also what's important to note here is that the Bank of Japan is probably one of the more dovish central banks on the spectrum. If we're talking about central banks really thinking about where they stand on the normalization process, the Bank of Japan is a little bit behind the rest of the world here. And it's really traders now kind of zeroing in on it as kind of the next potential arena where they can really challenge the central bank and really kind of dare them to kind of leave behind that very, very easy monetary policy that we've seen for the past decade.
All right, Bloomberg's Christine Aquino with everything going on in these bond markets. Thank you so much. Now let's talk about what's going on in geopolitics. President Biden trying to clarify his call for Vladimir Putin to be removed from power, saying he is not looking for regime change. European allies, of course, raising concerns about his remark from over the weekend, and critics warning he risks inflaming tensions with Russia.
We will have a different future, a brighter future, rooted in democracy and principle, hope and light, of decency and dignity, of freedom and possibilities. For God's sake, this man cannot remain in power.
For more, our Washington correspondent Anne-Marie Horder joins us now from Warsaw in Poland. So Anne-Marie, that's what the president said. How is the administration trying to spin it now?
Well, there's been a lot of diplomacy over the weekend, or backtracking, if you'd say, from the White House. Immediately after those comments, journalists were scrambling to try to get some clarity from the White House if the president had gone off script, or did he intend to say that Putin should not remain in power. And the White House said that the U.S. was not calling for regime change. And then we heard from Secretary of State Antony Blinken as well over the weekend. Take a listen.
As you know, and as you've heard us say repeatedly, we do not have a strategy of regime change in Russia or anywhere else for that matter.
So the White House says no strategy of regime change. We've heard from a number of allies here in Europe. Olaf Scholz saying that NATO allies are not looking for regime change, but he also ended his interview with German press saying the president said what the president said.
Yeah, and of course the president also called Putin a butcher. You can't expect him to want a butcher to be in charge of a major nation. On the other hand, obviously they have certain goals that precede others. Let's talk about how the Ukraine-Russia talks are going in Turkey. What do we know?
Well, we don't have those talks just underway just yet, Matt, but we are expecting them this week. We know that Turkey has been trying to be a mediator of sorts between Kiev and Moscow. And what we do know from President Volodymyr Zelensky speaking to Russian independent journalists yesterday, which Russian press is not allowing to show this interview, but he had said that Ukraine is willing to give up this neutrality or become neutral, not go for the NATO alliance. But the issue is that is written into Ukraine's constitution. So if they were to able to get to any sort of peace agreement, especially when it comes to their ambitions, when it comes to NATO, Zelensky would then have to bring it back to his parliament for a referendum. So it's a tricky path forward, but there is plans for these two countries to meet this week. So potentially there is a slight glimmer of hope when it comes to the diplomatic path, but we should note it hasn't changed anything on the ground.
Okay, yeah, we're just looking at those devastating images of Mariupol from the air. Thanks to Anne-Marie Horder, our Washington correspondent on the road for us in Warsaw. China is grappling with a number of COVID outbreaks across the country, the worst since the pandemic began. In an effort to curb the spread in Shanghai, the city of 25 million people is being locked down in 2 phases this week for mass testing of residents. For more, we're now joined by Charlie Zhu, Bloomberg's Shanghai bureau chief. Charlie, give us a sense of how this is being done, locking the city down in sort of 2 halves. What's the strategy?
As you said, the lockdown is designed to help, eliminate infections, identify positive cases, eliminate infections through isolation and treatment, just like what they have done, to other cities like Shenzhen, and Xi'an before. And as you know, China is still trying to stick to its COVID-0 strategy, but the Omicron variant is highly infectious, and that's really challenging that policy, whether it's going to work or not, we don't know. As for why they are doing the lockdown now, it's because infections are still surging despite lockdowns of select residential compounds around the city in the last week. So Shanghai reported 3,500 cases for Sunday this morning, another record. That's up from like zero at the beginning of this month. And Shanghai now has overtaken the province called Jilin in the northeast of the country as China's biggest COVID hotspot. So the situation is not doesn't look that promising.
All right, Charlie Zhu, Bloomberg's Shanghai bureau chief, thank you so much. And of course, as part of that, Tesla has gotten wrapped up in it, shuttering production in its Shanghai factory until April 1st. Tesla is lower by about 0.3% in early hours. Now, let's take a look at some of the other stocks on the move in pre-market trading here in the U.S. One I really wanted to point to is Apple. It's down about 2% in pre-market trading after a report from Nikkei overnight that it's cutting its production of the iPhone SE next quarter by around 20% amid lower demand. So that is weighing on those shares this morning. Other shares getting weighed on is basically anything in the energy complex, as we are seeing declines in oil. That is reading right through to ExxonMobil, which is lower by about 1.5% in early hours. But while oil is lower, Bitcoin is higher. That stealth rally continues, as Matt was telling us about earlier, and that's giving a nice lift to crypto-related equities in the pre-market trade here in the U.S. Coinbase Global is one of them. It's up about 4% before the bell, Anna.
Coming up on the program, then, Kaylee, Julian Lafargue, Barclays Private Bank Chief Market Strategist. What does he make of the move higher in interest rates, or the move higher in yields globally? And can we continue to see stock resilience in the face of that? We're certainly seeing that in Europe today. And on Ukraine, Leslie Vinjamuri, Chatham House head of US and the Americas program. She can give us some of the context to President Biden's comments in Warsaw over the weekend. Plus, charting a new path, Vanguard is pivoting away from founder Jack Bogle and its loyalists inside the $8 trillion mutual fund firm. Read more in today's Big Take story by typing NI Big Take on your Bloomberg terminal. This is Bloomberg.
Now they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com. webinars.
Tuesday, Bloomberg Technology is live from the Shop Talk Conference in Las Vegas. Emily Chang sits down with Uber CEO Dara Khosrowshahi, DoorDash President Christopher Payne, and Savage by Fenty President Christiane Pendarvis, bringing you insight and analysis on the future of retail.
Are there customers that you think you've permanently won over?
Bloomberg Technology live, Tuesday at 5 p.m. in New York, 2 p.m. in San Francisco on Bloomberg Television.
Welcome back to Bloomberg Surveillance, the early edition. We are simulcast on both radio and on television. I'm Matt Miller here in New York with Kaylee Lyons, Anna Edwards with us out of London. Now, for a long time, we've been talking about the possible end to the 40-year bull market in bonds. And this is a chart for those of you listening on radio that you will have seen many, many times in the past decade or two anyway. It's the 10-year Treasury yield in a range. The question is, has that yield now come out of that range as we come up above 2.50%? And does that mean the bull market is over? Eddie Vanderwalt joins us right now, Bloomberg Markets Live strategist, to talk about, well, many things, but this, I guess, is front and center, Eddie. With 250 on the 10-year, it's really a shockingly high number. We've come so far so fast.
You know, is absolutely astounding. The bond market's absolutely front and center at the moment. You're right. And, you know, that two-year Treasury chart, it's going parabolic. It's looking a bit like, you know, Bitcoin, pick your year, 2017 or whatever. It's really had a significant run-up. Now, the question is just how much tightening is the market going to price in, and whether equities and other assets can sustain, you know, that view of tighter policy.
And something else that's in focus this week. So we're focused on the Treasury curve, Eddie. We're also focused on oil. Oil prices really moving substantially lower, down by 3% today. 116 is the Brent price right now. And we head towards an OPEC meeting where there doesn't seem to be expectation that we'll get any change in the production, the output plan. Is this all about China, nervousness about Chinese growth?
I think a little bit. I think that there's a lot of that. I also think that we are getting to levels. I mean, people have talked about the U.S. shale production all year, saying when is that going to pick up? I think, you know, we're getting to levels, we have been at levels for the last couple of months now, where the shale producers can very profitably, you know, pump out production. Now, they've said that they don't want to do that while, you know, unless this looks sustainable, and these high prices do look sustainable at this point.
Okay, thanks very much, Eddie. Eddie Vanderwalt of the Bloomberg Markets Live team joining us here. Just a few headlines coming across the Bloomberg from the Kremlin saying Biden's statements on Putin are alarming. That is the line from the Kremlin. We've seen Washington trying to walk back those comments from President Biden over the weekend. The Kremlin saying no progress has yet been made in talks with Ukraine. And on the subject of energy, saying that the Asia-Pacific market will absorb Russian oil that Europe won't take. We'll continue to monitor for the latest. This is Bloomberg.
First step in building a connectome is to get your hands on some brains and then cut them up. It all sounds very grim, but Harvard turns out to be quite efficient with its brain harvesting. Jeff's lab can do a year's worth of research with a single mouse brain. Small chunks of the brain are fed into the slicer, where a diamond blade carves off a thin sliver of tissue. The tissue floats along some liquid and onto a piece of tape. The brain slices are then put into this very large machine, where they're photographed in the finest of detail. Software helps stitch the pictures back together into a single 3D image, and algorithms are applied to help make sense of what's going on inside of the brain.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question. Great question. Great question.
Great question.
Great question.
That's going to be the best question I get all night. I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Surveillance Early Edition. I'm Kaylee Lyons with Matt Miller in New York and Anna Edwards in London. Now keeping you up to date with news from around the world, here's the first word. The U.S. says the revival of a nuclear deal with Iran may not happen soon. Iran has made a number of requests recently, including that Washington removes the Islamic Revolutionary Guard Corps from a list of terrorist organizations. The U.S. is reassessing the political cost of reviving the 2015 pact, which of course limited Iran's nuclear activities in returns for sanction relief, including on oil exports. Barclays expects to take a $591 million hit after making a mistake on structured notes and exchange-traded notes. The British bank issued about $15 billion more of them than it had registered for sale. That required Barclays to repurchase the notes. And a stunning moment at the Oscars that Matt Miller can't stop thinking about. Actor Will Smith slapped presenter Chris Rock and was later awarded the Oscar for Best Actor. Rock had joked that Smith's wife, Jada Pinkett Smith, could be in the next G.I. Jane movie. That was a reference to her very short hair. She has alopecia, a disease which causes hair loss. Will Smith later apologized, but didn't mention Rock. Matt Miller, your thoughts, please.
Well, I just think, you know, the Oscar said violence isn't the answer or something like that, which is true. And Will Smith, Chris Rock, I mean, is a comedian. He does these jokes for a living. He's been making jokes about people, including this couple, for decades. And I don't think walking up on stage and slapping a comedian in the face is probably good precedent. On the other hand, you know, people do things in emotional situations, and I guess he's an emotional guy, so who am I to judge?
People have certainly been talking about this a lot. I mean, and then he went on to win the Oscar. So I guess we would have been talking about Will Smith and his long-delayed Oscar nod. We might have been talking about that anyway, but now we're talking about Will Smith for other reasons. I like Nicole Kidman's reaction face. That's certainly being picked up as a meme globally. So maybe that's where this one heads. Coming up on the program, Julian Lafargue, Barclays private bank chief market strategist. We'll get to him on his thoughts on what's happening in the markets at the moment. This move higher in yields so quick, what is it doing to his assessments of bond markets and of other assets? Because we have seen, of course, stocks being pretty resilient in the face of all this. Certainly in the European equity session, we're seeing that today. Stocks here in Europe up by 0.7%. US futures, though, flat to negative. This is Bloomberg.
institution I know of wants you to serve on their board, and you're very involved in the art world. What is it about art that attracts you?
Well, art is essential in a democracy, David. Art is so important. We know what art does to young people. We know that exposure to art brings about higher levels of empathy. It helps people understand how other cultures, other people live, and it just brings out the kind of humanity in all of us. There are times when I have observed leaders use language that is inhumane while talking about other human beings, while talking about the world. And I think to myself, this person has clearly never engaged in beautiful poetry. They've never listened to the words of a great playwright. They've never sat and reflected on a beautiful painting or picture. Because if they had been really educated, had they really been exposed to the arts, they wouldn't find it possible to use this kind of language.
From New York City.
We're in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
So recap the headlines.
You do not want to miss this
How
story.
are you thinking about those dynamics?
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. The biggest global bond rout of the modern era gets even worse. Treasuries are sliding, a key portion of the U.S. curve inverted, and the Bank of Japan stepped in twice to cap the rise in yields. Investors are dumping bonds on expectations the Fed will lead an aggressive wave of global central bank tightening. President Biden is trying to clarify his stunning comment that Vladimir Putin should be removed from office. He says he was not calling for regime change. European allies raise concerns about the president's remarks, and critics say he was further inflaming tensions with Russia. The city of Shanghai will be locked down in 2 phases to conduct a mass testing blitz for the coronavirus. The outbreak is challenging China's zero-tolerance approach to the virus like never before. The Tesla factory in the city will be shut down for 4 days. I'm Anna Edwards in London with Matt Miller and Kaylee Lyons in New York. And Matt, of course, we talked a lot about the Oscars. Maybe we'll leave that one there. But we certainly see some really interesting narratives developing across markets. The transatlantic divergence this morning is particularly of interest. What are you focused on?
Yeah, absolutely. I mean, we don't see a lot going on in U.S. stocks right now, but there is a lot going on in other asset classes. So S&P futures are down, I should say, 0.1%. We've seen them basically unchanged throughout the program. 45.31 is the level here. What I find interesting is the 10-year yield, now over 250, so 2.5029, as investors let go of some of that debt. NYMEX crude coming down as well, but it's still holding almost at 110, 109.12 for a barrel of Texas Intermediate. And Bitcoin probably the most, well, no, treasuries, I can't make up my mind, but Bitcoin is also very interesting because it's erased its losses for the year. It's had this slow and steady rise, which is very unlike Bitcoin, not a lot of volatility over the past few weeks, and is now trading at $47,000. So I can't decide if I prefer 250 on the 10-year or 47,000 on Bitcoin, but obviously one is a much more widely held asset. Kaylee?
Yeah, fair enough, Matt. Well, I would point out, though, that that move in Bitcoin is influencing the way equities are moving in early hours because some of those crypto names are trading higher, including Coinbase, which is up or Marathon Digital, which is up nearly 10% before the bell in pre-market trading. But as you mentioned, oil is moving to the downside. That is weighing on energy names, including Occidental Petroleum, which is down by about 2.2%. Apple is down about 2% as well. Nikkei reporting overnight that it's cutting its production of the iPhone SE by 20% next quarter due to weaker demand, so that is dragging on those shares. And then finally, speaking of production-related issues, Tesla is down about 0.6%. It's had to shut production in its Shanghai factory for 4 days because of that phased shutdown of the city in China, Anna.
Kaylee, European equity markets then moving to the upside today, despite a flat to negative picture on US futures, despite the concerns around what's going on in China and the global growth there, despite the higher yield environment, and the higher yield environment shown here in Europe, represented by the UK 10-year. I could have put in the Bund, though, as well. It is a global story. We're seeing those yields rise. Certainly, we've talked a lot about the Japanese case, and yet we are seeing that stocks are fairly resilient in the face of that. Banking stocks clearly have their own narrative going on around yields, and that steeper yield curve may be benefiting many of those, and so the banking sector doing well in the European session. InPost, this is a Polish company. We focus a lot on Poland for the geopolitics at this point, but this is interesting buyout story. It's a Monday, so merger Monday, or a focus on M&A perhaps is justified, and we see a lot of chatter in the markets and some talk that perhaps there's going to be some buyout interest in this particular name, and the stock is up by just over 30%. Let's quickly update you on what's going on Russian assets then right now. We have the MOEX, the Russian index, down by 1.6%. Of course, it opened at the end of last week, and a lot of focus on what we're seeing there in terms of Russian buying, but this isn't a normal market yet. We haven't got the ability of foreign owners of stocks to sell those, so foreigners can't sell, and we also see no short selling, so we're not talking about a normal operation. Reduced market hours as well, part of the story there. We'll see how the ruble performs. It is moving higher today. We'll see how the ruble performs in the context of President Putin's demand that he wants all of those Russian energy products to be priced in rubles and paid for in rubles. Resistance, no doubt, from Western countries to that, Kaylee, but that is certainly one of the big talking points at the moment.
All right, we continue to monitor Russia. Let's bring in now Julian Lafargue, Barclays Private Bank Chief Market Strategist. Julian, let's drill down into what we're seeing in the bond market. Selling pressure really across the world, curves inverting here in the U.S. How much further can it go before it may actually present a buying opportunity?
Well, we do believe that we're starting to get at the point where locking in rates is an opportunity. It really depends how you're thinking about rate. At the end of the day, some people are buying rates just because they want to hold the bonds that they're buying up to maturity. And in this current setup, it might not be a bad trade to lock in 2.5% on the 10 years. Of course, if you're more of someone who looks at the mark to market and from that perspective, performance, it may not be great in the next few weeks or months. So it really depends what type of bond investors you are. But at 2.5% on the 10-year, we do start seeing some opportunity.
What kind of rate increases, Julian, do you expect this year? I mean, are we looking at maybe multiple 50 basis point hikes?
Well, that seems to become the consensus. And of course, if you look at the situation as it stands today, that would make sense. You have a very strong inflation in the US and a Fed that is trying to restore its credibility. So the bigger they go, the better they have a chance of achieving that. Now, 12 months or the next 9 months in this year are still a very long period of time, and 3 months ago we weren't thinking that the Fed would hike almost at all. So a lot can change. It looks to us that the Fed will be aggressive, at least initially, but there is a strong chance that, depending on how things evolve throughout the rest of the year, the Fed may decide once they've restored that credibility to pause and assess. So yeah, overall you might see as much as 6 hikes this year, but it might be front-loaded.
Will they have to bring about a contraction in growth to restore that credibility, maybe even back-to-back quarters of contractions?
Well, so that I guess would be a recession, but it's hard to see how they will manage to bring down inflation without participating to some demand destruction. That's the only way you can solve inflationary pressure when they're coming from the supply and not the demand side of the equation. So we do expect that growth is probably going to be much lower in the next couple of quarters. We still expect healthy growth by historical standard in the U.S. So maybe a bit of a dip towards the middle of the year, but we don't think that a recession is on the card, or if any, it will be very mild in our opinion.
Julian, how similar or different are the Fed and the Bank of England narratives at this point? Because the Bank of England was a little ahead in terms of starting the rate hiking earlier. Does it offer any clues as to where the Fed story goes, or would that be to overstate it? Because it's really interesting the way we've moved from thinking about a 50 basis point increase in the UK just a couple of months ago to now talking about pricing in more than a quarter point rate cut over the next 2 years. Is this a story that stays on this island, or does it have a further global resonance?
It might be a template for how other central banks will see things play out. At the end of the day, what the Fed said initially was that he wanted to remain nimble, and that goes both sides. So right now he wants to be on the more aggressive side of nimbleness, simply because the data suggests that they should do so. But if the data turns around mid-year, we would expect the Fed to say what they say they would be, which is to be nimble and therefore maybe pause. We don't think a cut is necessarily on the cards for the Fed at this point. But I think what the BOE has experienced is likely something that other central banks in the world will face at some point, because the data is very fast changing.
Julian, thanks so much for joining us. Appreciate your insight today. Julian Lafargue there, Barclays Private Bank Chief Market Strategist. Now, President Biden is trying to walk back his call for Vladimir Putin's removal, saying he isn't seeking regime change. Joining us now is Leslie Vinjamuri, Chatham House head of U.S. and the Americas program. And Leslie, we've heard a lot of people say he's trying to clarify his position, or he's trying to contextualize it. But if you call a world leader a butcher and then you say, for God's sakes, he can't remain in charge, your position is pretty clear, isn't it?
It depends on how you think policy is made. U.S. foreign policy is made by the president with his closest advisors in consultation, in this case, with America's closest European allies. And so I think the U.S. has been very clear on what its position is on the use of force, on regime change, and drawing those very careful lines. President Biden is deeply emotional. He had just been to see refugees in Poland at the end of a very intense trip. And he perhaps said, through his words and his emotions, how he feels about President Putin. But no, he hasn't changed U.S. foreign policy. The problem, as we know, is that there are many people across the world, and certainly in places that the U.S. is trying to influence, whether it's India or Russia, China, that see Americans' use of power very differently than how the U.S. does. They see America as a country that is frequently engaged in regime change. And so the words of the president will be read very differently from how he and his administration intend them, and very differently from how they have very clearly communicated the limits of the U.S. intentions when it comes to the war in Ukraine.
Well, Leslie, if the root of this conflict seems to be Vladimir Putin, the man, why not push for regime change? Why is that a dangerous proposition?
Well, for starters, Russia is a nuclear armed state. We know that the U.S. And its European allies have no interest in engaging directly in military conflict that could escalate. The U.S. and President Biden in particular have been very committed to what's called a doctrine of restraint, that is exercising U.S. power in a way that's really clearly set to a set of strategic priorities, which are about deterrence of great power threats, certainly any direct great power competition or conflict, but not engaging in regime change. If you go back to the summer when Biden pulled U.S. forces out of Afghanistan, no matter what any of us may have felt about that decision, it was also a clear indication that this is a president that seeks to limit the use of military force, certainly doesn't aim to have direct great power war.
Leslie, I get that it's not our policy to go in there directly and take out Vladimir Putin, but I feel like the administration has communicated quite often that the point of the sanctions, at least partially, is to bring about regime change, right? They continue to say, we hope to put pressure on those around Vladimir Putin, and maybe that's going to lead them to take him out in a kind of Julius Caesar moment.
Actually, that's not what the president has said. The president's been very clear, as has the administration, over the course of 4 weeks, that the goal of sanctions is not regime change. The goal of sanctions is to change the behavior of Putin when it comes to his brutal military intervention, killing of civilians in Ukraine, to get him to pull his forces back and to end that war and to engage in a credible way in peace talks. So sanctions are, aimed at sending a very clear signal to inflicting economic pain, to reducing the ability of Russia to execute that war, and to really make it difficult to fund the war and to finance the war. So I think that's been clear. That's why so many partners have worked together across Europe and far beyond, across Asia, to really support those sanctions. It's really to change the behavior of Russia, to demonstrate that the world is not on the side of Russia's, again, very brutal, devastating attacks on the people of Ukraine.
Do you read much significance into the comments, the statements we got from Russia over the weekend about a change in their direction, their early goals having been achieved and a focus now on the east? Of course, it was then followed very quickly by attacks on Lviv, which is a city in the west of Ukraine. So read into that what you will. But do you take any comfort from the fact that maybe Russia is scaling back its ambitions in Ukraine?
So far, their behavior doesn't demonstrate that. I think that Russia knows, as does the rest of the world, that they've failed just on a pure military level to achieve their ambition. They've demonstrated their weakness in conventional terms. And some of the very brutal tactics that they're using are a sign of that weakness. So it does seem inevitable that they will have to scale back their ambitions. But again, the attacks on Lviv seem aimed at, sending a signal to President Biden, who was very nearby at that moment in time. Yes. But we're continuing to see operations on the ground that don't reflect the words of Putin.
Okay. What kind of impact do you think the visit to Poland in particular and meeting refugees and that experience will have on President Biden and the administration as they take that experience back to the United States? Leslie, clearly we had a doubling down on commitments to NATO.
I think we're going to see, again, an intensified effort to get more partners on board of those sanctions, to take the sanctions to the next level, to really work on the energy question. And also there will be a very intense debate about what kinds of military supplies to send to Ukraine. And that is deeply contested, I think, across many, certainly within the U.S. Congress, who would like to see more. But again, I think that we will continue to see a very careful calibration and an exercise of restraint. It's not seen as restraint by Russia, of course. I think the other very tricky thing, and we're very far from it, but it's going to be coordinating on that question of when and how and which sanctions are lifted. We saw Liz Truss make a comment about when sanctions could be lifted. I don't think that that's been agreed across the allies or the partners who are participating in sanctions. That's where things will get very, very tricky from the point of view of maintaining that unity.
Leslie, thanks so much. Leslie Vinjamuri, Chatham House head of US and the Americas program, giving us that US perspective then. Coming up on this program, Bitcoin's stealth rally has put it back into positive territory for the year. More ahead. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Today's CFOs are reshaping the C-suite, positioning companies to meet the next generation of challenges, breaking out of traditional roles.
One of the most important things is looking around the corner.
Look for Chief Future Officer on Bloomberg. Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller with Kaylee Lyons in New York and Anna Edwards in London. Bitcoin has staged a stealth rally over the past few weeks that pushed it past the $45,000 level, and it erased its losses for the year. Mike McGlone, Bloomberg Intelligence commodities and crypto strategist, joins us now to talk about what's going on. To me, Mike, it's the stability, the seeming lack of volatility. Of course, if you look at the Bitcoin chart compared to a lot of other assets, it's still incredibly volatile. For what we've been used to, it feels like it's come slow and steady up from 30,000 to 47. What do you think is behind it?
I think you got it, Matt. It's amazing how it just keeps proving itself. I'm kind of like, oh my gosh, it's still doing it. And the recent example is what happened to nickel. Remember, it shut down for a couple weeks and couldn't trade. Bitcoin never stopped. So to me, that was very profound what's happening with Bitcoin. It's becoming the world's most significant traded vehicle ever. 24/7, you can have price discovery, and it's gaining more and more adoption and liquidity and interest and demand every day. So it's very impressive. The key thing now is up on the day, up on the week. It's up really 5% from where it settled on Friday. Remember, it trades on weekends. And the stock market futures being down means, okay, by the end of the day, if stock market futures are up, we'll say, okay, Bitcoin gave us a leading indicator. But it's more significant. If Bitcoin goes up, stocks and commodities goes down, that potentially is that key inflection point a lot of us have been looking for, where this unique asset with no elasticity of supply is starting to show its bullish underpinnings.
Speaking of inflection points, Mike, Bitcoin has been in a range for basically the entirety of 2022 thus far. Can this represent a meaningful breakout?
It could be, Kaylee, but if the stock market drops 10, 20%, Bitcoin should have a problem, but it's already proving it's going to come out ahead. So I think that's the key problem this year, the ebbing tide, fighting the Fed. You know, if you allow more people to buy more stuff, means the stock market going up, it's kind of a problem. Bitcoin's been going down with that, but today's another example. Stock market futures down, Bitcoin up. It's in that transition. I think by the end of the year, who knows where everything's going to be. I think Bitcoin's proving itself, and then you look at all the other crypto assets, even Ethereum's still down in the year, and most of the other ones, all the 18,000 other wannabes, they're showing the purging that was way overdue of excessive speculation.
Mike, I was looking at some commentary around the 50-day moving average on Bitcoin that suggested it looked overbought, but actually saying that this signal has actually in the past been a sign that a buying signal. Which are the signs that you look for when you look talking about either technicals or other flow to talk about where we go from here?
Well, Anna, I'm glad you brought up that 50-day, because the key thing I watch is the 50-week. In my days in the trading pits, when I used to have here, the dailies will just make you lose your hair. It's the weeklies which are great. So today, I think it's more significant that Bitcoin's opening above its 50-week moving average in the first time in a few months, which is heading downwards. So maybe it's pointing it back up. So we'll see by the end of the day. But that's the key thing, is the day's good for the day traders. I think you have to focus on that more. But me being on a strategic side, big picture, it's the 50 weeks. That's the one that matters. But Bitcoin's basically the same price as it was over a year ago. I think it's just a matter of time that it breaks out to that trend, that enduring trend, which we know is higher.
All right, Mike, thanks so much for joining us. Mike McGlone there of Bloomberg Intelligence, senior analyst for commodities out of Miami. For more on the world of decentralized finance, be sure to tune in to our new program, Bloomberg Crypto, Tuesdays at 1 p.m. New York time. Tomorrow, we're going to be speaking with Meltem Demirs, Chief Strategy Officer at CoinShares, as well as Katie Stockton, founder and managing partner of Fairlead Strategies. This is Bloomberg.
Bioworks was founded in 2009 by several big brains from MIT. The founders wanted to develop ways to treat DNA more or less like software code. You find an organism with an interesting property, snip out the DNA behind that property, and then shove the DNA fragment into something else. The big promise behind synthetic biology is that we'll find a new means to harness nature and bend it to our will. We'll be able to manufacture things like chemicals and fuels and even physical objects in ultra-efficient ways.
Biology is ridiculously advanced, and we're just entering the era of being able to program it to do new things, and it's programmable because inside of it is digital code that we can, as humans, read and write.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Glines with Matt Miller in New York and Anna Edwards in London. Well, Anna, Matt, I continue to watch the bond market. The 10-year U.S. Treasury yield is at 250. The 5/30s curve have inverted for the first time since 2006. And the 2s10 spread right now sitting at just 13 basis points, Matt. Really quite remarkable, yet J.P. Morgan saying stocks can continue to look through this for now.
Yeah, I think the spreads are, a lot of us are keeping a very close eye on the spreads right now, especially after last week we saw the 3s, the 5s, and the 7s all invert. Now at 250, it's interesting to see if the 2s can get that high. That we're only at 237, but that's historically been the major marker that the market looks for in terms of a recession.
Yeah, everyone seems to have their favorite part of the yield curve, don't they, to look at for the clues about what happens from here. I'm intrigued as to just how resilient stocks can be. Certainly they are here in Europe, even as US futures look a little more shaky. The S&P up by more than 8% in the past 2 weeks, recouping losses since the war started. So that's the extent of the resilience we've seen from global stocks. More Bloomberg surveillance is ahead. This is Bloomberg.
you do any kind of business in this country, there's a pretty good chance that you're going to see that business registered in Delaware. Why? Because that's where you do it. And our point was Wyoming can be that venue for blockchain enterprise, for crypto.
It's not the Wyoming way to sit around and wait for change. We want that independence, we want that freedom, we want that individuality. And that's a common theme that brings together bipartisan support for this in Wyoming.
We want to make sure that people understand, especially in Wyoming, but as the United States as a whole, this trend is coming. It's not going to stop. This is more of a small town that's growing into what I would call the cryptocurrency version of Silicon Valley.
It's the philosophy of that rugged individualism, the independence, and the ability to really get things done for yourself and control your own destiny. You get that from a blockchain, and you don't get that without it.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Markets are challenging the Fed, central bankers. How much do you want to push this right now?
If inflation runs away from the Fed even more than it is now, we're all a lot worse off.
Higher inflation has generally basically been neutral because it's been passed on.
There is a huge question mark over how the household sector responds to the surge in food and energy prices.
The Fed can bring down inflation without harming growth or the labor market, but it is admittedly narrow.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
What a move in this bond market. Live from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance Live with Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Futures down 0.1% on the S&P. TK, the equity market's doing nothing. The bond market's doing a whole lot of something.
Yeah, the equity market is its own story, and maybe it'll do well because America ascended. John, I really want to emphasize this is a Monday to stay on top of the markets all day. Yes, it's the bond market, but it's also the currency market. And once again, over 40 years, Japan leads the way.
Dollar yen 125. We'll talk about that in a moment, Tom. The Treasury curve, the 3-year, the 5-year, the 7-year yield, all above the 10-year and the 30-year, and 2 10s are just 14 basis points.
Let's do the calculus, John. It's a first and second derivative, and both of them are ugly. The rate of change of the flattening of the vanilla 2-10 spread is just extraordinary. You turn your eyes off, John, to look at the Oscars or whatever. You come back and look, and boom, we're flatter.
Speaking of boom, Bramo, not much happening in the equity market, and welcome back. We're down 0.1%
she's back.
on the S&P 500.
So here's my question. Earlier this year, people were saying it's not just how high yields go, it's the speed of the move. Well, we've gotten both. We've gotten yields going substantially higher, and the pace has been unbelievable. I mean, if you take a look at 2-year yields, this is something that looks more like Bitcoin than it does the U.S. Treasury market. That hasn't disrupted equities either. So then can anything? I mean, honestly, what fundamental data are people relying upon for this move, for this resilience in equities?
Rates need to go higher. That's the view of Citigroup. This is what Andrew Hollenhorst thinks. Here's the line from Citi, Tom. Equity prices are roughly unchanged. A sign the policy path being priced is not yet being interpreted by markets as overly hawkish. That's why he thinks 50 at the next meeting, 50 in the meeting after that, then 50 again, then 50 again.
I thought we led on that coverage, and all through the weekend we did. Colby Smith ran it in the Financial Times over the weekend. But, John, you spoke to Hollenhorst in the 9 o'clock hour Friday. What was the distinction of his comments?
To constrain demand, you need higher rates, higher than people think, and perhaps higher than the Federal Reserve thinks as well. That is the bottom line from Citigroup, Lisa. Nothing controversial about it. This is what they're saying. To constrain what is happening at the moment, you need to get rates higher. And if you're going to go 50 at the next meeting, why wouldn't you do it again and again and again.
So it goes back to our initial question, which is how can stocks remain so resilient if the goal of the Fed will be restriction, will be actually crimping consumer demand rather than simply bringing things to a more normal pace?
That's the show this week, isn't it? Just a conversation about that.
Yep.
Through to Payrolls Friday. Equities down about a tenth then on the S&P.
Friday, really?
Payrolls just around the corner, Tom. The Nasdaq down 36.
Get out the calendar.
I'm
That
pleased
Bill
you've
didn't
read it.
tell me.
We're down about a quarter of 1%. On the Nasdaq 100. Yields up 3 basis points on 10s, much more so on 2s. We'll talk about that for you through this morning. 250 on a US 10-year, and Lisa, crude negative a little more than 4% at 109.27.
But for all the wrong reasons, not necessarily because people are optimistic about a resolution to the conflict, but because amid all of this, China is shutting down parts of Shanghai, which we will get to separately later in the show. Today, line them up. We got a roster of Fed speakers. They include, of course, Federal Reserve Governor Chris Waller, New York Fed President John Williams. I am watching him in particular. San Francisco Fed President Mary Daly, Richmond Fed President Thomas Barkin. Can they tell us how concerned the Fed is about that 530s yield curve, which we were talking about all through the morning and through the evening, which you did see last night? You did see invert for the first time going back to 2006. Does the Fed care, or do they actually want to see this? Because they need to get a bit more restrictive. They need to crimp consumer demand. They need something more like a hard landing in order to get inflation back to where they want it to be. Today, the U.S. Treasury is selling $50 billion of 2-year notes as well as $51 billion of 10-year notes. I'm doing this for you, Tom. It actually is getting more and more interesting. How much demand is there for 2-year yields that have risen to 2.4%? It has been an astronomical climb, especially considering the fact that to start the year, it was less than 1% as a yield on this. When do people start coming in, or do you still ongoing pushback as people ratchet up rate hike expectations? And at 2:45 p.m., President Biden is planning to announce his budget for fiscal year 2023. The focus will be on reducing deficits by more than $1 trillion over the next decade. We're expecting to talk about perhaps some sort of wealth tax, with billionaires providing a big heft of some of the deficit-reducing income. How much does he talk about the need for fiscal spending at a time when we're worried about the deficit? And if not, how do we counter that slowdown that eventually could lead to the hard landing that so many people are now expecting, John?
Well, Lisa, the sanctions are biting. Here's a headline for you. According to industry data, Russia oil exports falling 26% in the week of March 17th to the 23rd, Tom. Crude exports down 26%.
This is a backstory this weekend because the other news is so important, particularly in financial markets and the tragedy of this war. John, the commodity reality, I would suggest, went to a new level this weekend. Some real nuance there in materials and, of course, in hydrocarbons.
Well, let's talk about this weekend, Tom Keene. Days of diplomacy overshadowed by one line from the President of the United States.
For God's sake, this man cannot remain in power.
And just as that speech wrapped up, the walk back started.
As you know, and as you've heard us say repeatedly, we do not have a strategy of regime change in Russia or anywhere else for that matter.
Team coverage starts right now with Bloomberg's Anne-Marie in Warsaw, Maria Tadeo in Berlin. AMH, what happened?
Well, Jonathan, you heard it right there. The president said this man should not remain in power at the end of a very fiery speech that really outlined democracy versus autocracy. He drew parallel to the Cold War as he gave this speech in Warsaw, a NATO country on the border of this war with Ukraine. But immediately after and over the entire weekend, you saw the White House really working overtime to make sure they could clarify that this was not U.S. policy. But we should note, we've been here before with President Biden, just earlier this year when he said minor incursions, and the White House had to come out and really describe what he meant in terms of retaliations there would be on the Kremlin for any sort of invasion into Ukraine. We also were here in October when the president was asked about coming to the defense of Taiwan. Now what you see is a number of individuals, especially allies, weighing in, trying to make sure they can de-escalate, and this has not been taken to the wrong way and for the Kremlin to use it against the allies.
Anne-Marie, is Poland happy with what they have heard from the United States?
Poland is particularly happy with what they heard from the president, and I was there at the speech at the royal court, and There were big moments when you heard an applause from the audience, and this was mostly Polish individuals in the audience, some Ukrainian officials as well, and that was really when the president talked about defending NATO territory. Of course, that is top of mind of this country as they are so close to this war, and we've already had missiles just miles away from the border of Poland and Ukraine, so miles away, potentially so close to that NATO territory. The president in public and also in his bilateral with President Duda made clear that that the United States views Article 5 as a sacred obligation, and they will defend every inch of NATO territory. The president also met with American troops that are stationed here on the border, and what we've seen over the course of the past few weeks is more Americans coming to Poland. And what Press Secretary John Kirby of the Pentagon said to me is potentially maybe this may be the way of the future, that these troops remain here for longer, a stronger American presence here. And I think that's something Poland was very happy with.
Maria, can you actually build on that, this idea of the troop buildup that we're expecting not only from the United States, but also from European nations, how big it's gotten and sort of what the thresholds will be before they start to actually take action in a more active way?
Yeah, and by the way, just to go back into the point that Anne-Marie made, for a lot of European officials, when they heard that line, if he's got to go, he cannot stay in power. We've seen that for the past 48 hours, Lisa, everyone essentially from the biggest political institutions in Europe, but also the French president, have been trying to de-escalate actively, saying we should not use this kind of language. What we need right now is a ceasefire and a stop to the war. I'm not sure how calling Vladimir Putin a butcher or saying he needs to be removed from power is going to solve that situation. And there was this impression, particularly in Brussels, that one line, that particular sentence, actually took a lot of the shine away from the big moments that we saw at NATO and the European Union meeting on Friday. Now, to go back to your point, what we are seeing, and this was again on Thursday, the big NATO meeting, was this very clear signal from the Secretary General Stoltenberg that we are going to see more U.S. troops on the ground in Eastern Europe, and particularly, of course, always under the umbrella of NATO, but nonetheless, these are U.S. troops on the ground. And of course, we're talking about Lithuania, Estonia, Latvia, Poland, but also countries like Romania and Bulgaria. These are more troops on the ground, but also in longer operations sustained in time. So many of the officials that I speak with actually say the war in Ukraine, of course, has already changed in many ways the European defense.
Maria, thank you. Maria Tadeo out of Brussels, Anne-Marie Hordern in Warsaw, Poland. Tom, did it help? What was the objective? Richard Haas, the president of the Council on Foreign Relations, said this: the comments by the president made a difficult situation more difficult and a dangerous situation more dangerous.
They make gaffes, don't they? But this just was a colossal gaffe. I mean, I'm going to defer to the experts on this, John, and particularly historians of the presidency. But it's not that it was a gaffe. It's the when of it, the moment of it, and frankly, John, I think almost a sadness in that the trip, by all accounts, was going so well before this.
That's seemingly the unfortunate aspect of this, Lisa, one of them anyway, that the whole trip now overshadowed by just one line. One speech, one line.
Can Vladimir Putin take this one line and use it to edify his whole defense for this attack, to basically say that he has been attacked by the West, that they want to take him out of office? And really, that's what a lot of people are waiting for, is what is the response of Vladimir Putin going to be in terms of how he spins this? Or will this get water under the bridge, as you do see a bit more desire by the Russians, at least anecdotally, to try to end this? We'll see.
Bit of news out of Tesla, Tom, for you. Tesla to ask holders to vote on more shares for a stock split.
No, more
music to your ears?
I don't know. You know, the more shares is a theme today at Barclays. It's really serious, John. They just screwed up in an issuance of shares, and they're going to have to take a write-down. That's a different story at Tesla, but... you know, it's background noise to these markets. These markets, John, are riveting at this moment.
With a monster move in this bond market, your two-year yield, 2.37 on the month, up by almost 1 full percentage point. Futures down a 1/10% from New York City this morning.
Jobs Day is Friday.
Good morning. It's just around the corner, Tom. Keep up. Welcome back, Bramo. You've been missed. This is Bloomberg.
Keeping you up to date with news from around the world. With the first word, I'm Lisa Mateo. President Biden is trying to clarify his stunning comment that Vladimir Putin should be removed from office. He says he was not calling for regime change. European allies raised concern about the president's remarks, and critics say he was further inflaming tension with Russia. The U.S. says the revival of a nuclear deal with Iran may not happen. Iran has made a number of requests recently, including that Washington removes the Islamic Revolutionary Guard Corps from its list of terrorist organizations. The U.S. is reassuring the political costs of reviving the 2015 pact. The agreement has limited Iran's nuclear activities in return for sanctions relief, including on oil exports. The city of Shanghai will be locked down in 2 phases to conduct a mass testing blitz for the coronavirus. The outbreak is challenging China's zero-tolerance approach to the virus like never before. Residents will be barred from leaving their homes. Meanwhile, public transport and car-hailing services will be suspended. Barclays expects to take a $591 million hit after making a mistake on structured notes and exchange-traded notes. The British bank issued about $15 billion more than it had registered for sale. Now, that required Barclays to repurchase the notes. And a stunning announcement at the Oscars. Actor Will Smith slapped presenter Chris Rock and was later awarded the Oscar for Best Actor. Rock had joked that Smith's wife, Jada Pinkett Smith, could be in the next G.I. Jane movie. That was in reference to her very short hair. Now, she has alopecia, a disease which causes hair loss. Will Smith later apologized, but didn't mention Rock. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
Companies now, they're getting hundreds, maybe even thousands of applications. So softwares come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question.
Great question.
Great question.
Great question.
Great question. That's going to be the best question I get all night. I'm glad you asked that.
Bloomberg Television. Top experts. Great questions. Tuesday, Bloomberg Technology is live from the Shop Talk Conference in Las Vegas. Emily Chang sits down with Uber CEO Dara Khosrowshahi, DoorDash President Christopher Payne, and Savage by Fenty President Christiane Pendarvis, bringing you insight and analysis on the future of retail.
Are there customers that you think you've permanently won over?
Bloomberg Technology live, Tuesday at 5 p.m. in New York, 2 p.m. in San Francisco on Bloomberg Television.
We will have a different future, a brighter future, rooted in democracy and principle, hope and light, of decency and dignity, of freedom and possibilities. For God's sake, this man cannot remain in power.
The President of the United States over the weekend, those comments were walked back, clarified pretty quickly. Futures down about 0.1% on the NASDAQ, unchanged on the S&P 500. These moves in this bond market, let's call it 250 on 10s. Yields up a couple of basis points there on 2s, up 9 basis points to 236. Just for a reference point, the lows of March came on the first trading day of March, Tom. They were 125.93 on a 2-year yield. Look at where we are now.
It's absolutely incredible. I'm just looking at really the best index out there on this, which is the Bloomberg U.S. Total Return Aggregate Index. And it's real simple, John. The price decline in bonds taken aggregate has not been seen since the time of Volcker. 2 times in 1979, 1980-ish is the point I'd put. We are down 8.4% from the peak, and we've broken through any number of resistance levels that you look at. Someone qualified to give perspective on this is Russ Kosterich, portfolio manager at BlackRock, their global allocation fund. Russ, you and I know that it's all about yield analysis by pros and by the financial media until it's about price. Are you looking at bond price this morning because things are going down?
Well, good morning, Tom. Look, we're looking at bond prices because honestly, other than the day-to-day focus, the understandable focus on the headlines in Ukraine, this market has been all about inflation. It's been about the Fed. It's been about bond yields. And that's probably the factor that's having the biggest impact on market performance. I will admit, we spoke about this before we started. I am very impressed and quite honestly surprised about how resilient equities have been in the face of this melt up in yields.
Others, including one William Gross at a small shop out on the West Coast, have talked about breaking the long-term back of the great moderation, the great disinflation, however you want to call it, from John Taylor of Stanford over to one Lawrence Fink. Have we broken the back of the great moderation?
Well, clearly, if you're talking about inflation, it's hard to argue that we haven't. We have seen inflation not only at 40-year highs, we've seen a very rapid surge in inflation. And Tom, as you know very well, that great moderation was all about lower macro volatility. Growth was low but stable, inflation low but stable, not just for years, but for decades. And that did create a very benign backdrop for stocks, for private equity, for most risky assets. In an environment where macro volatility is higher, it's reasonable to assume that financial volatility is going to be higher as well.
Russ, when you talk about the surprise that you have about equities continuing to hang in there, do you buy the story that it's because the American consumer is still strong?
Lisa, I buy the story that it's because the economy, at least the U.S. economy, is still in pretty decent shape. And that, in turn, is largely a function of the consumer. Now, of course, inflation is a tax on the consumer. It is going to affect behavior. It certainly is going to affect behavior for lower income consumers. But the good news is we came into this in remarkably good shape. We've spoken about this. The labor market is incredibly strong. The servicing costs for debt are at multi-decade lows. Savings are up. This all means that even with inflation the way it is, we've seen a stronger household than we might have under different circumstances. And that is certainly helping, because if the economy is going to be in decent shape, earnings likely hold up, and I think this is why the stock market is proved as resilient as it has.
But we've seen such rapid moves in the bond market and frankly across Wall Street as everyone tries to rejigger and understand this new normal that we're in. What's the latest move that you've made? Big allocation shift as you take a look at the landscape and take a look at data that seems to be viewing an economy that's changing in real time.
Well, Lisa, I think the key word there is rapid, which is exactly the right one to use, because what is really disconcerting for the market is not the absolute level of yields. Let's be honest, a 2.5% 10-year real yield still very much in negative territory. That in itself is not a threat. The problem is both the rapidity of the move and the fact that the Fed has had to tighten into an economy that, while still strong, is decelerating. So basically, the big move we've done is we've reduced risk. Thankfully, we've been very underweight duration. We're maintaining that position. We brought down some of our equity risk, and we made sure that we're fairly balanced when it comes to the big styles. We don't have a big growth bet. We don't have a big value bet. What we are leaning into is quality on the equity side to find a strong fundamentals, earnings consistency, and pricing power.
What about cash, Russ? Have you raised cash this month?
We've been raising cash, Jonathan, for actually several months. And part of the reason for that is there are not a lot of hedges left. Clearly bonds have not acted as a hedge during this period of volatility. The dollar, on some days, yes, but it's been a less reliable hedge and not particularly convex. So if you're in an environment in which risk is up and there are fewer hedges left, the sensible thing to do if you're managing a multi-asset portfolio is bring up that cash to act as a buffer for equity risk.
Russ Kostrick of BlackRock, thank you, sir. TK raising cash, pulling back on risk just a little bit. Equities have done pretty well. They've held in there, given what's happening in this bond market, and that's making some people a little bit uncomfortable.
John, I just sent you a chart, which is arguably one of the most famous charts in the history of Bloomberg, and it's a Bloomberg Total Return Index. And John, where we are now, we have not been since Volcker. Where we are now, we have not had a price drawdown of debt since, I'm going to say 81, 82, and just before that, I'm going to say 1979. It's a cliche. But on this Monday morning, it's original territory.
This line came out of the investment bank at JP Morgan earlier this morning. Real rates are staying very accommodative, which tends to go against the recession trade. They average positive 200 basis points at a time of past curve inversions versus the current negative real rate, Tom. They go on to say, and they conclude with this line, one doesn't tend to have a recession from the starting point of outright negative real rates. That's where we are.
Well, I go with that, John, but let's go to the German two-year yield, which is maybe the global proxy here for stability. You've got a dash towards 0.00%. This is something Folkers Landau and others have talked about for ages. How does Europe adjust to a non-negative yield? The same kind of question as to how Japan adjusts is we adjust to higher inflation.
Something similar to the Federal Reserve and nothing like the BOJ, something in between. Lisa, that's the story, isn't it? The Fed's about to go big in the minds of many people. The ECB might do something later this year, and the BOJ is going to do absolutely nothing with interest rates.
Even more than absolutely nothing. They're going to come in and buy an unlimited amount of 10-year notes in order to keep yields low, which is the reason why the yen is no longer the haven, the weakest versus the dollar going back to 2015.
Dollar yen through 125 for the first time in 7 years. We've got a lot to discuss this Monday morning. Good morning to you all. Equity futures unchanged. Yields up a couple of basis points on a 10-year. 249.18. Your curve is flatter. Pockets of it inverting. This is Bloomberg.
first step in building a connectome is to get your hands on some brains and then cut them up. It all sounds very grim, but Harvard turns out to be quite efficient with its brain harvesting. Jeff's lab can do a year's worth of research with a single mouse brain. Small chunks of the brain are fed into the slicer, where a diamond blade carves off a thin sliver of tissue. The tissue floats along some liquid and onto a piece of tape. The brain slices are then put into this very large machine, where they're photographed in the finest of detail. Software helps stitch the pictures back together into a single 3D image, and algorithms are applied to help make sense of what's going on inside of the brain.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
If all you could see was the equity market, would you know what was happening in the bond market? I doubt it. Futures down 1/10 of 1% on the S&P.
Snooze fest.
I don't know what that was.
Snooze fest.
On the Nasdaq, down 0.2 of 1%. Last week on the S&P 500, up by 1.8%, even with a 33 basis point move on a 2-year yield in one single week, following a big move through the month so far. Let's take a look at the bond market. At one point this morning, you had a 3-year, a 5-year, a 7-year yield trading above the 10-year yield and the 30-year yield as well. 5s, 30s inverting. This is what things look like 2s, 10s at the moment. The yield up 7-8 basis points on the front end to about 235. On a 10-year, where are we now? Down to about 14 basis points. That curve has got flatter. The spread has got tighter. And at one point this morning, Tom, that spread wasn't 14 basis points. It was single digits.
Yeah.
It was 9 basis points.
Again, I'm going to go rate of change, John, here, and it all correlates in with currency markets. And as we mentioned in the outro last block, it is all linked together. You have to wonder how Lagarde adjusts, how Powell adjusts, and the Japanese clearly indicating they're almost MMT theory of 30 or 40 years.
We've got an idea about the direction of travel. The Bank of Japan's going nowhere. The ECB might make a move towards the end of the year. It's how quickly this Federal Reserve will move, and now the destination. Where is it, Tom? Because a lot of people think perhaps it's got to go a whole lot higher and sooner than we expected just a few months ago.
To your word, quickly, it is Adverb Monday, but you're dead on is where's the terminal rate, and that's what you'll be studying in the research reports.
When is it restrictive, Tom? Where is it restrictive?
We don't know.
2-handle, 3-handle? Does it need to be higher than that?
I don't have an opinion. I don't have an informed opinion.
But you're going to give us one?
No.
Okay.
No. I didn't know Jobs Day was Friday. That's amazing.
I'm pleased you're getting dialed in.
Let us move forward right now. We're going to move forward. We do this with Maria Tadeo in Berlin and Anne-Marie Horton in Warsaw. Julie Norman joins us from London with UCL, truly a world expert on terrorism and also on war. Julie, Elliot Ackerman, my book of the summer with James Stavridis, 2034. It's about the South China Sea, the Pacific Rim. But his article in The Atlantic this weekend is 2 Marines over a cup of coffee talking about the war, not the conflict, the war in Ukraine. Color for us with all your expertise how military people talk about this war.
Well, Tom, the Ackerman piece, I think, reflects a lot of the conversations that we've been hearing from those who are on the ground, especially in terms of 2 main things about how Ukraine has managed to maintain this resistance as much as they have. First is just the arms supplies that have been coming from NATO, especially from the UK and the US. and especially the anti-tank and anti-aircraft systems that have been coming in. So I think that underscores the importance of maintaining that kind of aid that has been effective. Obviously, Zelensky has called for a no-fly zone, but those anti-aircraft systems in particular have been very effective. The other thing that the Ackerman article underscores, which others have, of course, witnessed from around the world, is just the resolve of the Ukrainian people, the sense of motivation, and a sense of decentralization of the operation, the fact that people are able to adapt very quickly on the ground